Puncher, how are you?
I am good, buddy. How are you?
Nice. I'm great. Thanks for asking. When the first time anybody on stage starts speaking or breaks the silence, then it kills your music.
That
So
was
we might
you.
as well.
That was you.
Uh, no, I might. I don't know
Maybe
who
it
it
was.
was, but
Maybe it
no,
was me.
I was making a latte, so I don't think it was me. But
An
we
aristocrat.
might as well start talking, just because it'll just be silence and people will be wondering if the room is even working correctly. So.
Very
We're all
good.
here. We're just loading the room. You're doing an amazing job. Got the music rolling. It took Terrence like 2 shows before he got the music. Terrence, good morning.
That was impressive, Puncher. I didn't realize you could play the piano.
Well, I'm a master of jack of all trades, master of none. So, yeah, I was up worried last night that all the feature functionality of Spaces might overwhelm me, but so far so good.
We should all share this space since we have our special guest that you are bringing
Great
up,
idea.
Puncher.
Yeah,
So-
guys, if you could. I just texted Lynn. I don't know if anybody sees her come up. I don't know. I was just reading when I was looking at her bio that her Twitter had been hacked. I don't know how long ago that was and whether or not she got it back. But
Yeah, she's back.
okay, great.
Yeah, that was it. Yeah.
Excellent. So, yeah, just before Lynn gets on, pretty excited to have her on because I'll introduce her, but through her general partnership at Ego Death Capital, they get to see, kind of deep into layer 2 and layer 3, which I'm not even sure what the differences are. I mean, I understand it intuitively on Bitcoin. So we'll get to ask her a lot of good questions. And but until Lynn comes up, Darkside, how you doing, buddy?
Doing well, brother. Doing well, man.
Good. Let's get Thomas up here as well. And so what's the latest news before Lynn joins us? Anything? See, gold's down a little bit today. Markets are up in the fiat world. Anything? Anything catching your eye this morning, Dark?
Not really. Just kind of
Just grabbed
recovering.
I just grabbed a Robert as well, so maybe he's a good one for giving us little updates like that as well. Puncher.
What was the question?
Just what are you seeing in the markets today? The TradFi markets, Robert. I'm never going to get used to that, Infra.
Yeah, likewise. Sorry,
VIX,
Puncher and Dark. I didn't mean to jump in there and step on you guys. Sorry.
No,
Dark.
not at all. Not at all.
yeah, VIX is down pretty big, getting crushed back down, probably below 20 today. Looks like S&P will probably continue to have like a short covering rally, and bonds are kind of quiet. Dollars pretty quiet. But yeah, gold, I think it was kind of inevitable for gold. I did hear you mention gold. I think, those big, huge psychological levels, it's always pretty safe to say that you're going to get a pullback or a retest. So, yeah.
Infra, I think there's a good chance the bottom's in. I just feel like sentiment
On S&P?
Yeah, just on everything. I think sentiment got so bad, and then you began to just think about what's really happening, right? Inflation's down, rates have come down. Just it feels to me like, if you look to the second half of the year, the regulatory relief, sort of the Trump policies, are going to kick in, and I think that's exceptionally bullish, right? So I think just
Hey, guys. I think Lynn's here, so I would turn it over to Puncher. Kevin.
Yeah. Hey, Lynn, how are you? Can you hear everybody okay?
Yes, I hear everyone. Do you
Yeah,
hear me?
hear you loud and clear. So thank you for making time. I know you're super busy. Just want to introduce you to the Bitcoin Today kind of regulars. Myself, Darkside, Lauren, Robert, Terrence, Thomas, and a bunch of other guys and gals who jump up and we kind of keep it decentralized and respectful. It's a Bitcoin only space, although every now and again we'll go down some altcoin rabbit holes to try to convert and orange pill some folks. But Guys, I just want to introduce you. Lyn really doesn't need too much of an introduction, but she's a general partner in Ego Death Capital, where I'm an LP in both of their funds, for full disclosure. Lyn's the founder of Lyn Alden Investment Strategy. She's the author of Broken Money, which is an outstanding book, and if you haven't read it yet, you're missing out. She's a macroeconomics analyst, electrical and systems engineer, and we're super happy to have you today, Lyn. I guess the overriding theme today is let's get smarter on layer two and I guess layer three Bitcoin. Lightning is a protocol, as I understand it, built atop a protocol, which is Bitcoin. Um, and but there's a lot of not dissent, but a lot of misunderstanding inside in the Bitcoin world and the Bitcoin community about what it is. A lot of people are talking about how Lightning has failed, and so we're trying to get just an overall sense of what you're seeing in the market through what you can see through Ego Death Capital, not particularly what we're invested in, but it's kind of a broad scope of what you're seeing on that layer two and layer three. So I'll turn it over to you, Lyn.
Sure. So I think for a long time there have been multiple layers on Bitcoin. Currently, Lightning is the one that's most active, most in use. When you look at statistics by River or others, because they do kind of those really kind of well-researched reports on the network. That in addition to running their own large portion of the Lightning network, like a big node set, they also collect data from elsewhere, and they're able to analyze how much is being used. It's doing quite a lot of volume. I think one of the challenges and the reason people criticize that to some extent. I mean, there are technical limitations, but it's also tied up in the fact that in general, there's not a lot of medium of exchange usage across all of crypto outside of stablecoins. Generally, people use their Bitcoin or whatever other coins for either investing or other purposes. And generally, medium of exchange is a minority usage of it because more people tend to have a store of value problem than a payments problem, especially when using a fairly volatile thing that has tax implications. So stablecoins often get the kind of usage for short-term working capital and transferring money around in small to medium amounts, and Bitcoin has that other role, store of value. And so people that want to use Bitcoin as a medium of exchange have to go through volatility, they have to go through tax implications, and so it's already a somewhat of a filter. And that's same true for we don't really see a ton of ETH medium of exchange or anything else. So I think that there's one aspect to separate there. So then, given that people are using medium of exchange, Lightning is one of the main ways to do it. And there are still limitations with it. So, for example, even Lightning itself can't necessarily scale to say 5 billion people all being fully self-custodial with good UX and low fees. It does scale the number of payments and the overall volume pretty dramatically across the Bitcoin network. Um, but there are still limitations on needing, on-chain activity to open a channel, close a channel, and many other usage. So I think that while Lightning is a very powerful solution, it's often best paired with other things as well. So for example, there's federations. So increasingly, we're seeing integration between Lightning and Liquid, for example. There's also Lightning mixed with Chalmain eCash. So they're bringing back, 4-decade-old, cryptographic technology that was originally applied to run on the dollar system, but didn't really work out that way. And Bitcoin's kind of a better substrate for it. Um, and so that's another solution that kind of ties in well with Lightning. And then there are various other things. There are state chains, there are spider chains, there are multiple chains you've heard of that are generally either conceptual or literally fleshed out and in practice, but don't have a lot of like deployments or usage, but that are still available to scale the network. And then there are various covenant proposals that can essentially bring roll-ups or other things to Bitcoin. So I'll stop there for a moment, but I think that the summary there is that there are a lot of L2 potentials out there. Lightning has limitations, but is good at what it does.
Hey, Puncher, can I just jump in real quick? Just
Yeah, Lyn.
maybe for some housekeeping things. I don't know if you wanted to kind of keep this in the same format where it's more of a discussion with, the folks that are up here on stage participating. Is that kind of the format you were thinking of, Puncher?
I wasn't thinking of anything, keeping it free
Oh,
flow. I
okay.
know I want to be
Well,
respectful of
oftentimes
everybody on stage.
that's a
Yeah.
good way to flow. So if we do that, just throw your hand up, and then hopefully we can just have you interact and maybe just have this more of a discussion. Throw your hand up. I think maybe we stick to these topics first. And I know I've been getting DMs from people like about, macroeconomics and whatnot. Maybe we shoot for those kinds of things towards the end, but hopefully, keeping it on these types of things. So
Yeah, Lynn,
with that, I
what's your schedule?
totally,
What's your schedule look like, Lynn? Too. I know you're super busy, but
um,
how long do we
yeah,
have
how much
before?
time is it?
So I have an hour allocated for this.
Okay,
Nice.
fantastic. All right, excellent.
So with that, I sign off on everything she said, especially with, lightning having limitations. Oftentimes I think it's so oversold, and it's definitely can't do all the things that I've heard a lot of people say it can. So with that, I think we have our first hand. So maybe we'll go to Simon. If, like I said, if you want to ask a question or interact with the subject matter, just throw your hand up and we'll try to work you into the conversation. Simon.
Hey, Lynn. Yeah, thanks for giving us time. I guess my first question is with Tether making, I haven't used a stable coin on Lightning yet. I'm keen to do it as soon as I have a little bit of time. But with Tether announcing that they are doing stable coin on Lightning, a few questions. Like, do you think that can also eventually use some of the structures like has happened in MakerDAO and Ethereum, where we could end up having decentralized stable coins on Lightning as well as centralized stable coins on Lightning? And what are the limitations in terms of scalability? Like if El Salvador wanted to like open up some channels and enable, with stable coins on top of Lightning. Are we getting anywhere near that? And what are the limitations on a nation being able to do it?
So Taproot Assets is now out in the wild, and Tether has announced that they plan to have stablecoin on that. Um, Taproot Assets effectively allows you to um, move tokens across the Bitcoin network, and they can represent essentially anything. With obviously dollar tokens being the first and largest use case from what we see in the space. Technically, you could have Apple stock tokens if you wanted to, or anything really moving across the network if there's significant demand or liquidity for it. So I would say that Taproot Assets doesn't necessarily differentiate between fiat collateralized stablecoins and like say Bitcoin collateralized quote unquote decentralized stablecoins. It's more about transferring their ownership, moving them around. So it can work for both or any type of stablecoin, really. Um, when it comes to kind of decentralized or Bitcoin collateralized stablecoins, the kind of the history of the space is that algorithmic stablecoins have a bad track record so far. Overall, with Terra Luna being the largest public failure, but there's been a history of it. There have been some interesting protocols that have held up better. They rely on various liquidity pools. So, and some things can be brought from kind of tested elsewhere in crypto land and then brought to Bitcoin if they work. So, for example, there's a protocol called Liquidity on Ethereum, which has had frictions, but it's not had like these catastrophic failures that we've seen in like say Terra Luna when you try to collateralize a dollar with a altcoin. And there have been attempts to kind of bring that to Bitcoin. So, for example, the sovereign layer, which I'm not endorsing per se, but they have kind of done a similar approach with their layer two and introduced Bitcoin collateralized stablecoins on that a while ago. And I know that there are other people in the space that are publicly interested in doing that for some of these maybe newer L2s that are proposed based on BitVM and elsewhere. So I do think that there's a potential role for that. There's also stable channels, which is specifically kind of a Lightning concept. It's kind of like moving sats back and forth across a Lightning channel with some sort of external oracle, or technically you could have a federation of oracles, to kind of like track a dollar. So, for example, if you agreed to have a dollar on a Lightning network, on a Lightning channel, I mean, then you can have sats kind of automatically going back and forth in order to maintain your side of the channel being a dollar, or $10 or whatever the amount is. With caveats that there are certain volatility thresholds that could break that. Fiat collateralized stablecoins are kind of the biggest, most well tested, with the obvious caveat that they're censorable, they're potentially ruggable. Obviously, the bigger you get, the more visible the collateral is, the probability of that goes down. So, for example, I would expect less of that risk now than 5, 10 years ago. But there still are significant censorship risks. So, for example, someone in Argentina might have no problem using stablecoins, but someone in Iran might have a lot of problem using stablecoins because they're in a sanctioned jurisdiction, and yet individuals there have as many valid use cases as anywhere else, and just they happen to be in a jurisdiction that has issues there, which is why Bitcoin exists, fully decentralized.
And what are the scalability limitations in like opening a channel? Like how many of these transactions could you do in a stable coin? Like is there like a cap or something that kicks in?
So anytime you open a Lightning channel or close a Lightning channel, that has an on-chain footprint. Um, Now, with say custodial Lightning, one of the kind of the big things, ironically, Lightning does is make it so that custodians have almost infinite scalability between themselves. So, for example, if Cash App and River and some entity in El Salvador and some entity in Europe, if they all have Lightning channels connected to each other, Bitcoin can move around extremely freely with very large channels, and they're able to do a ton of volume over the Bitcoin network with very little on-chain footprint. Occasional rebalancing of large channels. And so when people have small amounts of working capital in, say, a custodial Lightning wallet, like on Primal, for example, that's like a Nostr app, and it has like this integrated wallet. Um, they have a cap on how much you can have in there because it's custodial, and they don't want to encourage big saving there. But basically, you can move around Bitcoin pretty effortlessly and with almost infinite scalability if people are willing to do that approach. But when people want to be fully self-custodial, the challenge is you have to be willing to open and maintain Lightning channels, pay the on-chain footprint for doing that, pay the on-chain footprint for closing them. And if you had to close, maybe, for example, when you open a channel, fees are low, but if for every reason you have to close a channel, including potentially having to close it due to an attempted, theft or something, because if the other side tries to close the channel unfairly, you might have to then do on-chain activity regardless of what fees are. So generally, Lightning channels have to be a certain size to be economically relevant. And so the main limitation is that it doesn't scale to billions of people non-custodially, but it's also not even clear that billions of people want to use non-custodial money. I think the key thing is, can something scale to everyone that wants to use it or wants that feature? And I think that Lightning combined with other L2s can achieve that.
Lynn, when you say rebalancing of Lightning channels, do you mean that it settles at layer one, for, or is that does that mean something else?
So you can think of Lightning channels like an abacus. So you open this channel with someone else, and all the beads are on your side of an abacus, or in this case, all the fractional Bitcoin, the Sats, are on your side of the Lightning channel. And as you kind of pay them, your beads or your Sats flow to the other side. And after if you open, say, a half a Bitcoin channel, which is a pretty big channel, after you've made all those payments and all your Bitcoin are now on their side. You can't keep sending payments from that Lightning channel unless you're also, say, receiving payments of a similar magnitude, and therefore getting some of those beads or Sats back on your side that allows you to repay them. And so, and most people are more one directional. So, for example, most consumers will um, spend more than they earn, like in terms of like on the Lightning network, whereas many merchants are on the other side of that situation. Now, if someone, for example, was receiving their salary and it would flow through the Light network and then flow back, you could have it more circular and more self-sustaining. But even then, you often find individual channels get used up. And when that happens, you basically have to potentially close the channel and reopen it, or otherwise do some sort of splicing or other on-chain activity to kind of rebalance where the Sats are on that channel so that further spending can happen. And there's a whole technical rabbit hole that you can go down, but basically there are, Lightning scales things a lot, but there are of course still limitations. And I think one of the most powerful things about Lightning is that it's not even necessarily one L2. So there's a public Lightning network where most channels have some sort of connection to other channels. But technically, people can have their own isolated Lightning network. Like two people can open a Lightning channel between themselves that's not public and it's not connected to the rest of the Lightning network. And that's also why when people analyze how much activity is happening on Lightning, it's always an estimate because it's actually a fairly decentralized network, and only a portion of it is visible at any given time. And even the visible portion generally requires collecting information from big Lightning nodes, like big channel operators. And so it's actually ironically, a rather decentralized and somewhat private activity overall.
So that those are like almost dark pools of money that you don't know anything about because they're closed systems, but they are in some way connected to the overall Lightning network. You just can't see inside of them.
Some of them are completely separated from the rest of the Lightning Network, but they are connected due to the fact that they're both on Bitcoin. So they still settle on chain in the same way, and that's how that money could transfer back and forth. But in terms of Lightning Network, you could technically have two fully functional separate Lightning networks. You could have like a China Lightning Network and a U.S. Lightning Network that are totally separate, or with small amounts of connectivity between them. But as it stands, because network effects tend to reinforce themselves, the Lightning Network, as we know it, is essentially one big network with some percentage of dark channels that we don't really know. And obviously dark channel sounds sketchy, but it could really just mean Cash App and Strike or whatever have this big channel between themselves because they find that Bitcoin's often going back and forth, and they don't want to do obviously on-chain stuff. So they could have this big, just one-directional channel if they wanted to. It doesn't have to be connected to everything else. And that's true for any, you can have two friends that decide to open a channel between themselves if they want to.
Got it. And beyond the actual like hard coding development that governs Lightning and is being built out, is one of the issues simply that it's the immaturity of the network effect? So, like for example, the complaint maybe a year ago was that maybe 5% of payments just didn't go through. Um, is that something that's just going to cure itself over time? And is it currently centralized in as much as there's a limited number of larger nodes that dominate the network?
So basically, Lightning Network has an agreed upon set of protocols, but then there are different implementations in a similar way that the internet is a shared set of protocols, but then different browsers or different applications can tie into it. So there are a few main implementations, and sometimes there are minor compatibility issues between them, even though they follow most of the same rules. They don't always follow all the same rules, so different QR codes and things like that. I mean, this it gets a little bit beyond my technical depth to list out the differences, but there's some implementations that they enable certain features that other ones don't, and therefore there can be some frictions between them. Now, payment reliability has increased over time. So, for example, anyone using the Lightning Network back in 2019 or 2020 would have had a higher rate of payment issues and at lower threshold amounts on average than today. So, payment reliability has been going up, and I think some of it is immature to the network in the sense that there are fewer people working on the Lightning Network than like say work at Microsoft or work at these big entities. So for an open source fairly small thing, uh, there's relatively few developers, and it's come a long way. Um, and so that whole payment reliability thing, while real, has dramatically improved.
Okay,
Hey,
thank you.
Tucker,
Yeah, let's go
can
to
I
Andy.
just can I do a little bit of housekeeping first? I don't know how much time you want to allocate to macro. I've been getting that question. Don't know if you want to go half and half or whatever. So keep that in mind because people want to switch topics too. I know we haven't discussed things like Fedimints. Lynn brought up liquid. Super intriguing to me. She's doing a magnificent job describing it all. I think we'll go to dark side first. I keep minimizing so I don't see the hands, but keep your hand up and we'll work you into the conversation here. Go ahead, dark.
Len, thanks so much for taking the time to come up and talk with us. Really appreciate it. Question is more around scalability. So if a company like MicroStrategy decided to, let's say, introduce a point of sale terminal that was also a node and stake those nodes, could you see Lightning scaling to, let's say, the entire United States?
So I think custodially it can scale to any number. Non-custodially, it's unless there's block size increases or other major, other covenants or things like that that can improve scalability. There are still limitations for fully non-custodial usage, regardless of how big the node operators are, because that's more of a function of how many channels can be opened and closed network wide, because it's limited ultimately by Bitcoin's on-chain footprint. So it can scale a lot, but it can't scale indefinitely in a non-custodial way. But the thing I keep highlighting is that it's still not clear how many people want to use fully non-custodial Lightning or Bitcoin for even small amounts like working capital. Generally your security and your permissionless requirements go up either because you're operating in size or because you're operating in ways that tend to run into more frictions. Maybe someone's in a certain business that might be valid, but that might have more banking issues or other kind of blockages on them. And I realized that I didn't answer a prior question. One of the prior questions was, is it centralized based on the fact that they're really big Lightning node operators? Um, and the short version is yes and, or yes, but it doesn't matter too much, unlike an L1. So if a layer one gets centralized, that can be rather catastrophic. Whereas an L2 is less of a problem when it becomes temporarily centralized, because the whole point of the network is that you can route around friction. So, for example, if there are five big nodes that are doing 80% of the traffic or whatever, and those five nodes, if one of them's censoring certain things, you could go around them. And if all five of them are censoring, then people can start their, they can ramp up volume on other nodes and route around the problem. And so it's different than a checkmate scenario on some sort of L1. And as a general working matter, network effects and liquidity effects kind of compound together. So you expect to see some degree of concentration up and until there's a problem, at which point you would see probably a shift elsewhere on the network.
Got it. I think we got Jesse and then Chris with some questions, and then Lauren, you can take the discussion in whatever direction you think we should go.
Hey, thanks, Puncher, and thanks, Lynn, for being here. We all really appreciate it. Amazing conversation so far. My question is just around sort of your thesis and maybe your big view of where this all goes. I've been around for a long time. Lightning's been around for a long time. You have all these other blockchains that come up and say, hey, we're fast. We can do this. We can do that. And really, to me, it's just this is like Lightning and everyone else trying to solve the problem of medium of exchange, right? Like we have store value. Bitcoin's been, sort of, we've all said, hey, look, this is a store of value. We've got the SBR, we've got sound money. And as I understand it, Lightning is, the reason I like it is because it's still running off Bitcoin, right? Still running off sound money. What's your opinion on, it sounds like there's going to be some scaling issues. Like, how do you think this all pans out with Lightning? Do you think it's going to be the main lead horse or, yeah, go ahead. Thanks.
So I would point out that, for example, when we analyze Fedwire, so the big centralized settlement system in the U.S., one of the two big ones, and then there's others globally. Fedwire does about as many transactions as the layer one Bitcoin network per year. It's almost the same number effectively, and they settle, and it's a fun number, but about $1 quadrillion a year, which is 1,000 trillions, because gross settlement numbers are always way bigger than things like GDP or things like total value. And so it's able to do a tremendous amount of throughput on that underlying settlement network, because if you do something like 200 million transactions a year, but the average transaction is $5 million, you get to $1 quadrillion or 1,000 trillion dollars. So the Bitcoin network alone is able to do, it's like an open source settlement layer with its own, scarce coin. So there's that. And then on top of that, we have Lightning. So you can do even more throughput because you can do one transaction on chain, use that channel for 5, 10, 50 payments, depending on how you manage liquidity, and then do a second transaction to close that channel, and you've effectively 10x or more the potential throughput. And then when you add things like Chalmy and eCash, liquid federations or other types of federations, potential like roll up L2s, spider chains, there's kind of this like pick your own adventure for how, custodial or non-custodial across somewhat of a spectrum you want your experience to be, especially for different amounts of capital. So, for example, if you're holding your main Bitcoin holdings, you can do an on-chain transaction. You can have your big major holdings, and then kind of like how if you're using payments and you're not in an environment where you're being filled with frictions or censorship, people can use better UX solutions that are maybe have a custodial trade-off, but they only have as much money in there as they would have in their physical wallet, and therefore risk losing it or being mugged or anything that happens in the real world. I think that's kind of a thing to consider, is that a lot of people ask, how can I have every sat or every cent that I send around be fully non-custodial all the time and yet have perfect UX? And the truth is that non-custodial activity or censorship resistant activity, or decentralized activity tends to have a cost to it. And so there are certain areas where that cost is worth paying. And there are other areas where people tend to be less willing to pay it because they instead want the speed, the UX, and they're willing to put $200 equivalent at risk, even if it's a low risk. I mean, if in the future, if Bank of America is running Lightning nodes, you're probably not going to get rugged, but you do have a risk of your payment just being told like you can't do it for that activity. So then, if you find yourself wanting to do those activities that might be perfectly valid, you might have to take on more frictions and do things on your own.
Well said. We'll go
Or
to the
inside a
next.
federation.
Yeah, I don't know if you wanted to get into that or not, Puncher, because we still have a few hands. I think that we want to
Yeah, let's get
get
to
to the
the
hands. I
hands.
believe that the order would have been Chris and then Thomas. We have a new speaker, Nick, as well, with a hand up. Dark's hands back up. So hopefully we'll take care of some of these hands. Go ahead, Chris.
Yeah, thanks, and hi, Lyn. I'm really interested to hear your thoughts on regulation regarding Lightning, because we've seen in the US wallet of Satoshi, Phoenix disappear, and obviously from if you've held Bitcoin for a long time, and I've run an L&D node where I built it on a Raspberry Pi and used it. So I've got some experience here with balancing channels, which was difficult and time consuming. And also, when you start looking at the tax implications, you suddenly have a lot of transactions that are going on where obviously there's friction. And you've got Jerome Powell saying, Bitcoin is not a threat to the dollar, it's a threat to gold, where the store of value narrative kind of at the moment seems to make sense in the mainstream. And so, and in the UK, and I think America are probably the same, we don't really have a problem with high time preference transactions. We have, and in fact, globally, where the world is dollarizing, most people are choosing to use dollars because it's more stable than Bitcoin. And predictable. And so, store of value for me, given where Bitcoin's at and how early it is, seems to make the most rational sense. So I'm kind of interested. Like, do you agree? Where do you stand on the regulation side of things? And yeah, your views on those points would be really welcome.
Sure. So regulation is an ongoing, changing kind of goalpost thing. Lightning has certain frictions because channels are closer to something like a money transmitter business than a miner or on-chain broadcast activity. And there's, generally speaking, governments have issues with privacy, and Lightning is a fairly private technology when used for privacy. And so it does run into frictions or regulatory requirements. Back when the US kind of took their gloves off and went hard against like Samurai and some others, like basically non-custodial privacy things, I think there was a little bit of an overreaction. It's understandable where there are operators that were doing nothing like that, that wanted to pull out of the U.S. just in case. And so not to throw shade at Phoenix, but I've seen valid critique that they probably didn't have to do that. Um, and it's kind of a shame that that's not accessible at the moment. Um, and so regulatory frictions are an ongoing issue for the whole space. I've been on the record to say that even with this administration or maybe future administrations, even as they might be more conducive to Bitcoin as a store of value, that there probably are still going to be challenges on privacy, because um, governments around the world tend to have an ongoing issue with that. So I think that it's going to be a friction to work through over time. And like you pointed out, I mean, there's tax implications when transacting in Bitcoin, and so often for small amounts, unless people are power users or doing it purposely to kind of enhance Lightning, or because or other similar reasons. Generally speaking, people often are happy to make payments with their fiat and store Bitcoin, and then they would, if they find themselves censored one day, maybe they would tap into their Bitcoin and use it to go around that blockage. But more people tend to have these store value issues rather than frictions. Kind of like how, if you put Bitcoin aside for a second, if you're just in TradFi, you might hold the Nasdaq 100, but you're acknowledging that there's some volatility and tax implications with it. So that's your main kind of store of value, and then your day-to-day transaction medium is your checking account, which is not great, but it's solving your stability problem in the near term. And we see a generally similar dynamic so far in Bitcoin and stablecoins, which is people treat Bitcoin often like an investment, stablecoins more for working capital and moving money around pretty easily, and then generally turn to Bitcoin for that latter use case, the working capital and moving it around, generally because out of principle or in some cases because the majority of their income and net worth is in Bitcoin, which is obviously globally still a very small minority.
I believe we're at Thomas. Good morning, sir.
Hey, good morning. Thanks for being here. My question is around market adoption for this layer 2 ecosystem, things like Lightning and Fedimints linked back to the Bitcoin layer 1. Do you see the market adoption coming from a technology capability from the bottoms up, or do you see it's like business consortiums, supply chains starting to create networks, and then we have networks of networks driving de facto adoption through what I'll call more of a top-down approach?
I think certain technologies are more conducive to bottom up or top down. Um, my expectation is kind of bottom up on average, unless there are major regulation changes or implementations from the top down. So people can build the slickest thing they want from the top down, and if just people aren't using it, then people aren't using it. It's really hard to kind of fix that unless you're solving a problem that they're not being solved with similarly by other solutions. Um, and so, people talk about scaling challenges, but there are literally several untapped, well-known scaling technologies available on Bitcoin. There's currently, only a subset of them are in use, like Lightning or Federations or to some extent Chalmy and eCash. There are others that just haven't been fully explored or attempted in deployment, because so far, on average, except for rare spikes, on-chain fees tend to be pretty low. There's a fairly small percentage of people that wake up every day and want to use Bitcoin as a medium of exchange. And so I think that over time, as people have bigger cash balances in Bitcoin, as the volatility goes down, as certain jurisdictions maybe have add more favorable tax treatments because a larger percentage of their citizenry are Bitcoiners, and then they pester or lobby their politicians to say, hey, anything under 5,000 a year is tax free, because this is monetary technology and go ahead and use it. I think that this is like a long term transition, because you're comparing, a Bitcoin network that's large in the 1.5 to $2 trillion network size concept, but it's going against like $100 trillion global entrenched network that, especially for large pools of capital, still works pretty well. has easier tax implications, and so it's inherently this slow-moving underdog against this much larger existing system.
Super. Hey, sorry that we're not getting follow-ups in here. We're trying to get as many questions in as we can and utilize the time we have with Lyn to the best of our ability. We do have Scott, aka Darkside, up next. But by the time we get to Robert, I'm assuming we're going to be pivoting because Robert's a macro guy. So go ahead and ask your question when we get to you, Robert, and macro. Dark, floor is yours.
Yeah, Lynn, just shifting gears to layer three and Fediments. Um, have you like I know lately there's been some kind of rumblings around Saylor and Jason Lowry's thesis on securing cyberspace. What are your thoughts around using layer threes federations to secure networks using a lightning or a layer three paywall?
Well, originally, proof of work was designed as an anti-spam technology, and then it was kind of repurposed by Hal Finney and others toward, a scarcity mechanism for coins. So I certainly think that there's validity to that. Um, and you can have micro payment thresholds to reduce bots and things like that. I also think more broadly, Bitcoin is useful as a truth layer, which is starting to be used more, but it's somewhat untapped, I think. So, for example, open timestamps has been around for probably a decade now. I mean, a very long time. It's an open source method to kind of hash something on chain without putting the actual kind of content there. So let's say you make a PDF and you want to say that this is unchanged since the current block. Instead, you could if you could pay a ton of fees and stick the whole PDF on there, um, or you can put a hash into the Bitcoin network and then store the PDF somewhere else or in multiple places, and then anyone can kind of prove that that PDF was not altered since that block or that any sort of file type. And so, for example, the government of Guatemala literally timestamped its 2023 elections onto the Bitcoin time chain uh, after having 2019 election irregularities using that method. And even one county in the U.S. did it during the 2024 election. And there's kind of others that are I think increasingly utilizing that. So I think both as a micro payments against bot protection, uh, and as a kind of a objective global open source clock or kind of truth layer. I think there are implications for both of that, and both of them ultimately involve proof of work or proof of value, and relies on Bitcoin's relative immutability.
That's a great company called Simple Proof that Lyn's talking about that did that, and expecting great things from them. Infra, what do you got, buddy?
Hey, I think Nick had his hand up first, so I didn't want to
Oh,
phase
sorry.
him out. No,
Sorry.
I apologize. Nick.
And I think my question is going to be a good bridge on into macro too, hopefully. So kind of a first, Lyn and Simon, you guys are some of my favorite minds on the whole internet to listen to. So big fans. And then so on going back to Lightning on Tether, from a macro picture around like stable coins and the U.S. bill that's coming in around stable coins. Do we and the reserve requirements around that? Meaning, is Tether going to have to divest themselves of their Bitcoin? So is this Tether on Lightning? Do you think that could be a Trojan horse into BTC being a big portion of the fundamental settlement layer via Tether, via U.S. acceptance of Tether? And then kind of a two-part question. Part two is from a macro asset pricing perspective, looking at some of these other chains like Solana and Ethereum that aren't really, but I would argue that Bitcoin's primary offering is as a store of value, and these other ones seem to be more utilitarian. Do you think from a macro asset pricing perspective, it would be more appropriate to view them as a cost to business, the same way paying for your internet or paying for software licenses, companies are going to be and entities are going to be paying for and using the smart chains. Just curious on that.
Sure. So yeah, a lot of questions there. Generally speaking, I view, at least historically, stablecoins and Bitcoin have increasingly for a while separated, which is to say that initially stablecoins launched on a essentially a Bitcoin L2. They gravitated elsewhere because many people, when they look at stablecoins, they say, okay, these things are centralized. Do I really care if the layer it's running over is also centralized? Or do I just care about low fees and convenience and high throughput? And so generally speaking, stablecoins migrated over to Ethereum and then migrated over to Tron for many kind of minimum exchange use cases. And Taproot Assets is one of the potentially viable ways to bring some of that activity back to Bitcoin. It still remains to be seen how to what extent or how long it would take to chip into the existing numbers elsewhere. One of the main kind of conveniences is if you have a Bitcoin wallet or a Lightning wallet, many people would say, well, I'd like to also be able to send dollars from that. To make a payment that uses that wallet that doesn't have tax implications, for example, or to store a little bit of working capital in something more stable in terms of purchasing power in the near term. And so instead of running using a whole different wallet and a whole kind of technical duplication, you can incorporate that right into a Lightning wallet, which is valuable. So I think that's a potential solution to bring some of that activity back to Bitcoin and to potentially increase the volume overall. Macro speaking, I mean, you mentioned, for example, Tether holds Bitcoin. I mean, certainly they could be told, hey, you're going to get Tether basically operates at the allowance of the U.S. government, which is to say that a lot of other governments don't really have much of a say in what they do too much because their tokens can kind of penetrate other countries. But the U.S. Being the issuer of the dollar, Tether has to kind of comply with what they want. Now, Tether's reserves generally are backed by T-bills and other good collateral, and they're now over collateralized. And so some of their over collateralized assets can be in Bitcoin or other things that have some degree of volatility, as long as they're operating in the good graces of the U.S. government. So there are obviously trade-offs there, and the U.S. government basically views stablecoins as a mechanism to get T-bills in the hands of more people indirectly. So even as top level nation states are not really buying treasuries on net anymore, and even private large foreign pools of capital are only slowly increasing their treasury holdings and therefore not keeping up with the rate of issuance. U.S. government can say, well, even if those top levels decide to try to gradually de-dollarize, the bottom layers are still very much attracted to the dollar and its network effects. I mean, if you go to Cairo and in the streets of Cairo and you say, okay, I want foreign currency, the dollar market's going to be way more liquid than any other major currency, and that's true for many countries in the world. So they basically see that as an opportunity to say, well, if you want dollars, here are stable coins, and those are backed by T-bills and similar collateral, and it gets in the hands of more people. It's still fairly small in the grand scheme of things, but if it ramps up to a few $1 trillion in scale, then it really kind of impacts the macro landscape.
Wonderful. Okay, I think this will be our transition point because one of our macro nerds within the community, many of you know as Infra, but actually recently became known as Robert, his real name. Robert, sir, the floor is yours.
Hey, Lyn, thanks for being here. I'm personally a huge fan, so it's great to get to talk to you. I'm really curious your opinion on this kind of monetary reordering that Scott Bessent mentioned multiple times before he became Treasury Secretary, and I know you follow Moran as well. He's written extensively about this. It's clear that they understand Triffin's dilemma. We see the trade deficit blow out in January. I think that they understand the second and third order effects of being the reserve currency issuer with hyper-financialized economy, driving this historic wealth inequality, and all the kind of political consequences, that go down the list. My question is like, so you've had Trump, talk about Greenland and Canada. Um, and it would seem to me that that's not for nothing. That if their plan is to move away from kind of dollar-based reserve assets and towards maybe multiple different foreign exchange currencies or reserve assets like maybe gold and Bitcoin, it would seem to me that Canada and Greenland, being resource rich, could help a balance of payments issue. This huge twin deficit that America runs. Greenland and Canada could help maybe offset that if our dollar was to be fundamentally valued again. Because DXY would be much weaker. In 50, 60, 70, somewhere down there. So do you see, question one is, do you see that Greenland, Canada talk as an indication that it is indeed their plan to move away from the dollar and towards something like gold and Bitcoin? And then my question two would be kind of, there's multiple ways that they could go about that. The zero coupon century bond, taxing foreign held treasuries, or any foreign held U.S. dollar denominated assets, would certainly be one. Michael McNair, if you're familiar with him, he wrote an excellent paper on attacking the kind of capital and financial account inflows as being probably the most likely. But question two would be, if you do see the likelihood of kind of a monetary reordering, Mar-a-Lago Accord, do you think that Greenland and Canada are kind of indications of their intent to do that? And then, second question would be like, how do you think that they would go about addressing? Would it be attacking the financial and capital account inflows? Like, how would they go about it?
So I think that so far the best outline is probably Stephen Moran's paper from 2024. So that'd be November 2024. So after Trump was elected, he's Trump's nominee for his chair of Council of Economic Advisors. He kind of puts forth the steelman argument of how to try to do all this. It's kind of like having your cake and eating it too, because as I pointed out, the kind of the cost of being the global reserve currency and having all this demand for your currency globally means you have to supply the world with that currency, and the world does that by basically overvaluing your currency, therefore increasing your import power, decreasing your export competitiveness for lower margin goods. So manufacturing, but not really like technology or healthcare. And so dollars flow out into the world via structural trade deficits, which kind of feels good at first, but then when you do that for decades, you deindustrialize yourself, and the rising political costs start to outweigh the political benefits. So the U.S. says, well, we love the fact that we're the global reserve issuer because we can censor anyone, we can sanction anyone, and that's great at first, but then over time, it's like, is that worth deindustrializing yourself over? And when it gets to a point that the political winds shift otherwise, and people say, I don't really care about censoring Iran, I want to bring manufacturing home. And so that kind of starts a pendulum shift. I think the challenge is that they want to have both. One of the ways to try to have both is to basically get more explicit about America first and start kind of charging for things. So it's like, hey, we used to kind of have a somewhat free security offering to the world, and now we're going to make it more transactional, for example. Now that has risks, because if you make it more explicit or more costly, other countries could say, well, I'm not sure I'm willing to pay that, or maybe I'm willing to pay it to this other fairly large entity that may be more relevant in my region. And so I think over time, it's it's like moving a container ship or turning a container ship. It's a very slow and hard thing to turn, unless you do it really shock and awe, which has major kind of macro volatility impacts and economic impacts. But I think that they're at least trying to have their cake and eat it too. In the Stephen Moran paper, he talks about how some of these policies are dollar strong at first, but then later, as you progress through the steps, you can weaken the dollar, and they become kind of more dollar negative, in the sense that it makes the dollar more valued based on the trade situation. rather than as a monetary premium good. Um, and even that paper talks about discouraging other countries from using the dollar as a reserve asset and being even willing to maybe charge them a small fee if they do that. Like say, hey, you can hold treasuries, but the U.S. government's going to take 50 basis points every year back, for example. And the funny thing is that kind of contradicts the goal of trying to get treasuries in the hands of more people via stablecoins, for example. Sometimes you have either the same person in an administration kind of talking past themselves, or talking kind of contradiction to themselves, or sometimes you have different officials in an administration that might each be unified in and of themselves, but contradict the other side or the other ear of the president. Different factions within an administration. I generally put the Greenland and Canada talk aside, just because that's such big implications that I think are unlikely to be part of the U.S. As a nation state. Certainly, we'll see if any movements happen there. But I think that's mainly indicative of the idea that the U.S. At least for the next 4 years is more transactional, more domestically focused, and kind of more explicit about its security agreements or things that it wants in exchange for what it provides.
Wonderful. Hey, just a little bit more housekeeping. We're having some issues with spaces. I didn't see all the hands. Punter's been having some issues hearing some of the speakers and whatnot. So I know our resident Hollywood producer had his hand up, and I missed out on that. So we will go to Terrence. But Lynn, just FYI, just when you need to peace out, just go ahead and let us know. Don't feel obligated to stay past the allocated time or anything. We understand we're going to keep the space rolling and have some follow-up chat and whatnot for a while. So
Lynn
please
can
feel
just
free.
Lynn can just rug us. She's got a train to catch, and we know there's nothing stopping that.
Yeah,
So
go ahead, Terrence. Take it away.
yeah, just a quick general question, Lynn. I know you and Sam Callahan put together that amazing global liquidity report as it correlates with Bitcoin, and which showed that it had such a very high correlation. I believe it was like 83% or around that area. But you guys also put that together before the current administration and many of the things that you and Infra were just talking about, you and Robert. Um, if you were to do that report today, based on some of the shifts happening, do you think that the correlation would be much different than what you had published? Not so much statistically, but just sort of holistically with where we might be going.
So I think the short answer is no, because that was based on over 10 years of data, whereas now we're operating on a couple months of new information, or a few months if you go back to the election starting point. Um, and even in the paper, we point out that liquidity, while highly relevant, is not the only thing. So if Bitcoin moves with liquidity on our set time interval 83% of the time, the question is, well, what's happening the other 17%? And therefore, we looked at things like valuation or sentiment. So we use the market value to on-chain average cost basis ratio, so MVRV, market value to realized value ratio, and says, well, if that's extraordinarily high, like we see at the tops of major historical bull markets, then kind of regardless of what liquidity is going to do for the next 12 months, the sheer euphoria of Bitcoin is going to probably drive price, usually downward, then liquidity is going to have a say. Similarly, if the largest country in the world comes out and says, "Hey, we want to buy 1 million coins," or "Hey, you were previously worried about the administration going after you, now you don't have to worry about that for a while," that does add new information to the market that then gets adjusted in price. So I think that while that exact correlation can shift over time, maybe it's 83% in one 10-year period, and maybe it's 70% in another 10-year period, or 90% in another 10-year period. I think as long as Bitcoin is still a somewhat treated as a risk-on asset because of its volatility by many pools of capital, I think it's likely to continue having positive correlations with liquidity, and there's different ways to measure liquidity. But that's still constrained by the fact that it's not the only variable, and there are other variables related to regulation, related to euphoria or valuation, that are also really important to take into account. So I think having at least 3 or 4 or 5 major things you're looking at when deciding the probability of Bitcoin doing well over a 12 to 24 month period has to take into account, those at least a handful of key things.
Thanks,
Okay, we have
Lynn. I see
time.
Simon's hand. Simon, we've only got
Hey,
a few minutes.
Terrence, maybe we'll give Robert another shot because his hand was up first. So I
Copy
know we
that.
have a couple minutes. So I don't
It's
know if
quick. It's
make
quick.
it snappy.
Yeah, it's
Yeah,
quick on
perfect.
liquidity. Like we were talking about with the trade deficit blowing out, what I noticed, I put it in the nest to kind of maybe visualize this, but what I noticed was that as our current account deficit has generally gotten, increased or gotten worse, the Federal Reserve balance sheet has generally expanded. And so I'm curious, we've seen this period of QT, but the current account deficit is blowing out. Historically, that should cause weakness in the dollar. Do you see them likely coming in to expand the balance sheet to, lower rates, support confidence, kind of inject liquidity to offset this kind of blown out current account deficit?
So for the most part, I treat them separately because, for example, when we look at countries with on average current account surpluses like Japan or much of Europe historically, they have a lot of balance sheet increases as well, despite being structural exporters historically. And so I generally treat those somewhat separately. Um, there's uh, there's more correlation between government debt ratios and central bank balance sheets. So when you start to get up to 80, 90, 100% debt to GDP, the central bank tends to own a larger share of the existing sovereign debt of that country. And when you get to like Japan's case, where you're over 200%, the central bank owns quite a big chunk of it. So that's the correlation that I think is more relevant. Basically, that the higher debt ratio you get, there's more likely that the central bank is helping to monetize it to some degree, rather than it being primarily a trade deficit or current account issue. Now, there are some implications, like if a central bank decides to provide liquidity, it's generally, on average, somewhat negative for its currency, and therefore can affect the trade balance, either positively or negatively, depending on what you're exactly looking for. But yeah, I largely treat that somewhat separately, and I think when the Fed is deciding what to do with their balance sheet, they're looking at inflation measures as they measure them, and then they're also trying to maintain liquidity in the banking system and kind of by extension the treasury system. And I think those are the constraints or pivot points that might lead them to shift from, say, quantitative tightening to neutral or even gradual balance sheet increases again, like we saw in 2019.
Hey, Lynn, do you have time for Simon's question, or do you need to run?
I can do one more, yes.
Okay, we'll do Simon, and then any more questions, unfortunately, you guys will have to have Lynn back on. So, Simon, go ahead. Got a few minutes.
Okay, yeah. Do you think we're in an environment where the Fed would allow a recession to happen? And could you see if we entered into a recession? Do you think could you see a decoupling of Bitcoin away from a recessionary correction?
So I think the Fed only has so many tools to, disallow a recession. I think fiscal is a more powerful tool. So, for example, if there were to be a big fiscal contraction, in other words, if the train stops temporarily or slows down severely temporarily, um, the Fed cutting interest rates or doing QE isn't necessarily a silver bullet to prevent that. Whereas if the government decides, hey, we're going to do a $2 trillion stimulus, or we're going to print money and send checks to people again, that generally gets you out of a recession pretty quickly at the cost of price inflation with somewhat of a lag. So fiscal bazooka is more powerful than the monetary bazooka, with the caveat that at scale, the fiscal bazooka needs cooperation from the monetary bazooka to actually make to buy the debt or to help keep the debt markets liquid, even if they issue a ton at once. So I think that's the more relevant question: is will the administration be willing to go through pain for the economy and kind of the downstream effects of that? Certainly temporarily, I think they could. But it is as it gets worse, or as the political winds shift, then they potentially hit more pain points and see that the cost of what they're doing is maybe hurting them for midterms or for reelection, and therefore maybe they pivot toward more market conducive policies for a period of time. So yeah, it's not to say that I don't think recessions can happen. It's just that I think there's different levers that happen, and that when you see like emerging markets, generally speaking, instead of having a big unemployment recession, you often have a big inflationary recession. So everybody's, most people are still employed, but they can all buy fewer imported goods now. If like I spend part of each year in Egypt. When they go through economic turmoil, it's less about unemployment levels, and it's more about even people with their current jobs just can say, hey, well, the currency got cut in half, money supply is growing by 20+% a year. I'm not getting raises of 20% plus a year. Therefore, my ability to buy cars or computers is actually worse than it was 2 or 3 years ago. In many cases, that's what you'll see from an Egyptian perspective or many other people in developing countries. And when a developed market gets highly indebted and enters fiscal dominance, some of its recessions can look more like those emerging markets. So, for example, when we look at the misery index, which is unemployment plus inflation, 2022 hit like recessionary levels, um, largely because of the inflation component, not the unemployment component. Similarly, when you look at, say, the availability of bank credit, 40% of banks in the senior loan officer survey, or over 40%, reported tightening lending standards in 2022 and 2023, which historically happens in a recession only. And yet we didn't have like an ember defined recession, largely because the unemployment cycle didn't occur. And instead, everybody kind of felt pain, or like a lot of people felt pain and said, hey, I'm still employed, but it costs more minutes of work to buy a carton of milk, for example, and that's causing my family pain, and therefore I'm going to critique that, right? So that's how I think that recession kind of unfolded, which is that it happened through the inflation vector rather than the unemployment vector, and that's a somewhat different recessionary profile. So I think that going forward, should they, that was a post-COVID environment and a post highly super stimulus environment. I think if they do try somewhat of a fiscal contraction, there is more of a risk of a kind of a typical recession or a typical developed market recession, which is to say, a period of disinflation, a period of higher unemployment, lower economic activity until they kind of shift otherwise. For the last part of the question about Bitcoin's correlation to that, um, I think if you have major kind of shock and awe in asset prices, so if you're in like this big economic contraction and the Nasdaq is going down, it's unlikely that Bitcoin's doing well in that environment. Um, if on the other hand, if you enter a more stagflationary environment where economic growth is slow, corporations' margins are pressured for a variety of reasons. Could be inflation, could be tariffs, could be just less economic activity, other factors like that. So maybe the stock market's not doing great over a multi-year period, um, and maybe the dollar is weakening in that more stagflationary environment. You can certainly have Bitcoin decouple from the Nasdaq and do pretty well in the comparison. So I think that it can certainly decouple over these longer periods, and it's just less likely to decouple when you have more of a severe temporary kind of downward move in asset prices or economic measures. And I think with that, I have to wrap it up here, but I really appreciated the conversation.
Yeah, Lynn, thanks so much. Thanks to everybody at Ego Death Capital, yourself, Nico, Jeff, Andy, Preston. You guys have been really great to me, and hopefully we'll see you in Vegas, and might have Jason Lowry, Lieutenant Colonel Jason Lowry, give a little private talk with some beers and some snacks. So hope to see you out there, Lynn. Thank you.
Thanks, Lynn.
All right.
Hey, can I jump in real quick and just apologize to the people that we were trying our best to utilize the time, as efficiently as possible. I know some of you guys were trying to get on stage. We had to rearrange things a little bit, so apologies for that. But we were just trying to get as many questions in as we could in a orderly fashion. So apologies there if you guys didn't get on stage or didn't get your question in.
Yeah, and we'll have them. We'll have them back. I'll pester them. And we'll get different hosts back.
Super.
Hey, Lauren, do you want to talk real quick about how we trying to run Bitcoin today with different hosts?
Yeah, that's a great idea. Yeah, so I think the idea was we love the community. We all are about the same principles that think you kicked the show off, stating like about freedom, love, hope, Bitcoin, all these good things, but uh, we didn't really find it in a space where there was decentralization. So I think that the real thrust here is to do this in a decentralized manner. So basically, a bunch of us just decided to say, hey, let's, do these spaces and let's do it in a way where like Puncher is going to take Fridays and be the host Fridays. We're going to have Dark Mondays. Hump Day is going to be Terrence. So hopefully we'll just continue this on. We're just trying to get the Bitcoin Today thing out there, not as a brand to, you know, be glorifying one person or to try to create a company, but more so that people know like, hey, this is a community of Bitcoin focused folks that are, trying to make a difference in the world, trying to build community, trying to make a change in the world for the positive. So that's kind of the thrust of everything. So we've been going from 8:30 a.m. Pacific Standard Time till about 10:30 or 11 every morning, and then we're even trying to work in other shows when we do get hosts to volunteer in certain places. So that's it in a nutshell. I think maybe I've said too much, but back to you, Puncher.
Yeah, sounds good. So anyway, Maxine Waters thinks we're going towards civil war. I'll just drop that and see what everybody else thinks. Just saw that. Dark, what do you got on your mind, bud?
Thanks for bringing up Maxine Waters. Yeah, what a nut job, right? Like, the question is she pre-programming something? Do these people have something up their sleeves? I don't think so. I think the Democrats are in their dying throes. I think the fact that Schumer bowed down to the president and to the administration and agreed to vote for this CR. Not that I'm a huge fan of CRs, but I just think that the fact that they've bowed down gives me hope that other legislation, tax cuts, potentially Bitcoin legislation, stablecoin legislation, maybe this is the start of something really beautiful where we're able to actually get some policy change and get it codified into law with Congress. So I don't know what's going on there. Whether Schumer's doing that politically or he's doing that because someone showed him a picture of himself, I have no idea. But ultimately, if we can get to the point where we can actually get a functioning legislative body that's willing to actually push legislation forward to benefit the American people, I'm a huge fan. But as far as Maxine Waters goes, I think she's just a nut job on the fringes.
For sure. I mean, it seems like we're coming up against all kinds of walls, whether it's walls that the Democrat Party, the Republican Party, or we're just at this. No matter which way you turn, you're going to run into problems. I mean, the continuing resolution. It seemed to me, if Schumer didn't vote for it, it clearly would have been blamed on the Democrats for shutting down the government. And in that shutdown, Trump could have continued doing a lot of the things that they don't like unobstructed. Um, so we kicked the can a little bit politically, but say we get to a point where now we're going to have a bill proposed in the House that does a lot of things that Democrats don't like. Well, what are we ever going to get to a vote, or are we just going to continue to kick the can? It's hard to see on so many different roads how things play out. Simon, you got your hand up. Go ahead, Simon.
Yeah, do you want to give everyone an update on government shutdown and like CR and Thomas Massey and stuff because it's all happening
Yeah,
in real time?
yeah, of course.
Go on, you give the update. That was for you.
Oh, for me. Oh, I don't
Yeah,
know.
Dark and Puncher. Are you watching it in real time? Because I know something. I know it's all happening today, but is it? Are you out of the woodwork or?
I'm out of the woodwork because I was focused on this and doing some fiat work. But Dark, have you been following it?
I've not. I've been on the. I've been focused on Lyn Alden's message. I don't think anything new's come out. I believe that the Democrats have caved, and the last I heard, they're going to push this legislation through. I think Schumer agreeing to vote for it gives the cover that the other senators, I know Fetterman, a bunch of Democrats will hop on board. I think this is a fait accompli.
So is that confirmed? There's no shutdown, or it's still questionable at this moment.
Well, I don't believe the vote's taken place, but I think that the general understanding is if the leader of the Senate agrees to get this done, then that gives the political cover for the moderate Democrats not to want to step in front of that. So yeah, I would suspect that we're probably a 99 delta to see that CR go through, no shutdown. But more
Yep.
importantly, does this signal that the Democrats realize that fighting every little tooth and nail is a losing battle for them? I mean, just a few days ago, Schumer was screaming that we're shutting down the government. The Democrats will never vote with Trump, right? So what changed, right? Is it political or is it something else? Um, I'm not sure.
I I think Schumer understands that to close down the government and take the political hit and allow Doge to continue unobstructed during that shutdown, even perhaps accelerating it, was just the worst of the two options, right? So he chose wisely, I think, politically for him. If you're thinking as just a pure politician, the problem is the Democrat Party is so now filled and inundated with these radical, almost Marxist factions that he's going to suffer politically inside of his own party because they are appalled at this. So, never shoot your enemy when they're trying to commit suicide. But they've got some big problems. I don't see how they get out of it. I don't see any leadership coming up through the ranks that has anything that's impressive to me. So we'll see how it all plays out. Puppy, go ahead, buddy.
No, man, great, hey, great stuff as always. Great to hear, Lynn. Good to sit back and hear people ask questions. Yeah, I'll tell you what, you're absolutely nailing it. The, what you said with Schumer, you can't allow Doge to have more time to uncover all of the grift, all of the crime. They're going to they just want to get this thing as fast as possible. They want to get things done. And you're right, with the Liberal Party right now, it's interesting because JFK, right? He would be called far right. Go back and listen to his speeches. That dude would be called far right by this current party. We're going to see how this plays out. But I tell you what, man, we got 4 years of thankfully just rip the band-aid off. That's all we want. That's what Americans want. Rip the band-aid off. Who's getting paid? Who's getting? It's not so much like I get there's fraud, waste, and abuse, but it's the outright theft. It's the outright stealing of money from the backs of the taxpayer. That's what gets people pissed off around here, and this is what we're watching unfold. So yeah, we'll see how it plays out. But yeah, good afternoon, everyone. Happy Friday.
Hey, Pancho.
Yeah, Puppy. And I don't even think the Republicans. Yeah, Dark. Just a sec. I don't even think the Republican Democrat labels even pertain anymore. I mean, if you saw Charlie Kirk was on a guest on Gavin Newsom's podcast or whatever it was, and
Yep.
Gavin Newsom said, "Are there any Democrats you like?" He goes, "Yeah, I like RFK Jr. I like Tulsi Gabbard. I like Elon Musk. I like Donald Trump, who was a Democrat. Like, you kicked them all out of your party because they didn't toe the line." And of course, Gavin Newsom just sat there looking, with Vaseline teeth, looking like a dummy. But it's not that to use those words now, like with my old friends who were row house Democrats, union workers and tradesmen. There's almost a negative connotation to say, well, now you're Republicans. Like, nah, actually, now you're just like as somebody who cares about eliminating grifts and shrinking the size of the government and lowering inflation and moving on to a better system. The old labels don't apply. Go ahead, Dark.
Yeah, I was just going to say, look, I think that the administration, more importantly, the DOJ, now has the goods on a whole bunch of politicians, not just Democrats, but Republicans. So they could either pursue prosecutions or they can use those goods to get through their agenda. And I suspect what we're seeing is the latter.
Yeah, maybe. And the heat's really drawing down on Pam Bondi because every day that goes by we don't hear anything about whether it's politicians who enrich themselves or the Epstein files or the Diddy stuff. I mean, it's eerily quiet, and that water is boiling to see some scalps. So we'll see. I mean, obviously, people are pissed because they're not releasing things, but we've talked about this before. The magnitude and scale of all of these kind of crimes And all the repercussions, if you just kind of release it, would be so devastating to the system. I think they have to be very orderly and deliberate in how they're going to roll out, say, prosecutions. You know, the FBI announced a kind of a mid-level FBI guy engaged in some chicanery. That's not the scalps that are going to satiate the people who are truly pissed off. And by the way, in 20 some days or 30 days, they're going to have to write checks to the government, understanding that those checks are going to fund all of this grift. I think that, you know, you're going to start to see some big scalps, and if you don't, that chorus of voices for Pam Bondi and the DOJ and the FBI to do something is going to get louder and louder. Thomas, go ahead.
I think when you're watching all this stuff happen in Washington, it's very important to remember that not all that we see is all that there is. And there's a presentation layer that is for public consumption. And if you try to figure out the puzzle without the rest of the pieces, you won't understand what might be going on behind the scenes. Now, we can speculate what those missing pieces are, and we often do, but those are just speculations. And I suspect in a week's time, and 2 weeks' time, and a month's time, we'll have better clarity about some of those new pieces that show up on the board. But it's I want to say it's very entertaining at one level, but it's extremely serious on the other. But I don't. It's almost like a parlor game to figure out what's going on. I like this whole issue with the Epstein release. You know, it would be nice to satiate curiosity about what's in that thing or not, but I don't want the release of it to undermine the prosecutions that would come as a result of that release. You don't want that to be undermined. So, for me, the goal is not to release. The goal is to hold the people who did things that were despicable accountable for that. And until we start seeing people held accountable, I think we should be very skeptical that they're going to be able to pull off this macro plan that they have.
You know, that's an important point. And guess what? I want to see the perp walk. I don't even care, Democrat, Republican. I don't want to care. I don't really care. Anyone that mess with children, fuck you. You're going to jail. Okay, that's just it. This is. I know. I think I speak for many Americans. Democrat, Republican. You mess with kids, you're going to jail. And I don't know. It was a week ago it came out that someone said, "Oh, it could be a national security issue." Well, yeah. If it's a national security issue, that's all the more reason to release the names. We got to clean this thing out, man. Clean it out. Put some sunlight on this. Let's clean it out because that's bullshit. If you're not going to release names because it may be a national security issue, we got bigger problems already.
Hey, Lauren, could I jump in?
Yeah, go
It
ahead.
looks like you're in the air already, sir. So go ahead and land. Yeah,
Okay.
come on
Yeah,
in.
I just wanted to
Water's fine.
share. Edward Dowd put out a piece or a podcast. He was being interviewed, and I thought it was fascinating. Very quickly, he said that there were, it's deliberate and overt Biden administration policy to import immigrants, and they brought in northwards of 10 million, and they were moving them through the Darien Gap, and they had funded a whole complex apparatus of NGOs to facilitate this. And he was estimating between $25,000 and $100,000 per immigrant was the cost to bring them in. So their estimate was between 500 billion and 1.5 trillion dollars of US money funded this wave of immigration, ostensibly, to flip the demographic to vote Democratic. And I just find this to be utterly breathtaking. Now Dowd says that the money stopped, the border sealed. About 2 million of those people got jobs. The rest are on the dole. Some are self-deporting. But it's just it's like a treasonous and breathtaking event.
Yeah, I mean, it happened it happened early. I remember out here in Scottsdale, there was an old hotel that was suddenly rented out, and surrounded by police vehicles, and a lot of people were around protesting that they were housing, illegals in this place. And then every time I went to the airport, there were people, these kind of Karens that had badges on, escorting clearly what were illegals that were flying into the United States. And sometimes there were five, sometimes there were 12. They would get on the airplane before everybody else and seemed to be very organized. And at the time, everybody was masked up and afraid. And I was the only one. I just walked right up to the woman. I said, "Who are you? And who are these people? And what are you doing? And under what authority?" And they would say, sir, you're violating their right to privacy. I'm like, oh, I mean, they're not citizens. So, like, who are you? And everybody just watched it happen. I have videotape of it all. I took pictures of it all. Nobody gave a shit. So they're here now, and whatever that plan was has been stopped. At least the flood has stopped. But what now, right? Obviously, I think they failed in that great. They always thought that when somebody said that it's the great replacement theory, they would scoff at that. But that's exactly what it was, as Nikolai said. So now what? Like, how does this all play out? You've got a lot of people here in school systems, draining resources. Yes, some might self-deport, some might be working. That's great. But again, unsustainable just is the word that keeps resonating in my mind. And I'm just curious what the plan is to deal with this. I know that they're arresting kind of the worst of the worst. They're seeing a lot of pushback from that on the left and from Hollywood, and particularly at Columbia University, the guy who basically led a riot inside of Columbia. I don't think politically that's good for the Democrats. Another loser for them. But we shall see how this plays out. Hey, Dark and Lauren, I got to jump. Can you guys take over for a little bit?
Of course, of course.
Are you talking to me? No, I am totally. No, it seems like the conversation took a 180-degree turn from where we were. So, I'm struggling with the whole political thing just because I find that if focus on negativity and anxiety and all the stuff on the dark side, the more evil side, it actually begets more of that in my life. And this whole politics thing, I struggle because I don't want to hate the other side, and I realize there's a better and worse, but I just struggle with these political conversations. No offense, I respect
No,
everybody's
it doesn't.
opinions and whatnot.
It
So
just went there, so I chimed in. But
yeah,
I
no,
agree.
absolutely, yeah,
I
yeah, I
agree. I mean, at
understand.
the end of the day, nobody's coming to save you. It doesn't matter if your guy's
Hmm.
in there. This is a debt-based
Yep.
system that has to grow in debt
Yeah, for
forever.
sure.
And when it,
And that's one of the reasons I Bitcoin. Yeah, absolutely. Because I really think that behind the scenes, money does rule the world, and money is in control of both of these political entities. And I think that voting harder hasn't really fixed things in the past. And I think the new approach is changing the money. And I think that's where the revolution of Bitcoin comes into play. And that's where it's important to have these kinds of communities, because it's the collective will of the people that will change things, not being whipped by some overlords that control the purse strings. So I struggle. I think that probably we didn't leave a lot of room to follow up on some of Lyn's questions. We just cut people off and didn't let them, fully play out some of these topics too. So if we want to swing it back to some of those things, we could parse out some more of the things, because we really didn't even have a lot of back and forths. We just kind of cut the person off and then went to the next question just in the essence of time. So feel free to jump back into what we were talking about with Lyn as well. But I know Joe came on the stage. I think Joe was saying some of us were simps, and I am guilty. I was first in line to have my book signed by Lyn. Took a picture and the whole nine. So yes, sir, I am totally uh, a Lyn Alden simp. So with that, I'll shut the hell up. Dark.
Yeah, look, I thought it was an amazing conversation, and you know, I have a lot to process from what she said. We touched on so much so fast. One of the things that kind of hit me was the limits to the scalability of Lightning, because it has to settle back to the layer two. Um, I've kind of thought about that. I'm not sure how that applies if if the node operators are actually custodians. So like in the question I asked, look, if MicroStrategy decided to fund 1 million Lightning nodes, right, through point of sale terminals, what does that really look like? And does that scale infinitely? I think it does, right? Because ultimately the ability to settle back to the network would be very limited because there's really one custodian. But I'm not sure about that, and I'd love to get TC up and some other experts on Lightning to kind of take that conversation to the next level. But I really enjoyed having her up. What an awesome opportunity that was for the community to get access to one of our more brilliant minds.
Hey, so Dark, imagine on your conversation about that point of MSTR doing it, what if someone like Starbucks were to create their own Lightning network for payments across their stores, and they capitalized it appropriately, and then started to link that Lightning network to others in their broader B2B ecosystem, but that then the Lightning network was also was multi-tenant with respect to tokens. So it might ultimately settle down to layer one, but you create some very interesting smart contracts and specialized tokens that can be used to drive accretive business, marketing opportunities, et cetera. It's more than just a potential payments mechanism. It's a way to transform the user behaviors linked to the commerce doing business in a B2C world.
Yeah, I mean, it's like all of these things are, it really gets down to the plumbing, right? So I think what I'm trying to struggle with is each Lightning node that you create, right, has to be funded. And as money flows from one node to the other, right, what happens is one node begins to get drained of funds and has to be replaced or has to be, and what that process looks like to refund a node means that I think there's an on-chain transaction, right? So ultimately, if you had millions and millions of nodes, right, that have to be constantly balanced and refunded, then does that mean you have, hundreds of millions of on-chain transactions? I'm not really sure how that works, how the plumbing can work, right? Or is there a next generation like are we going to get down in order to make that work, do we have to go to a layer 3 potentially? I see TC just hopped up. Well, TC, um, I don't know if you've been following the conversation, but how would how would this scale to like a new set of payment rails? Does it have to go to layer 3 or can this be done on layer 2?
Lightning essentially is limited by the same scaling issue that layer one has, and that's on a channel basis. You're thinking about nodes, you should shift your thinking into Lightning channels. So anyone can run a Lightning node, but until you establish a channel, there's no sort of plumbing, so to speak, to get sats in and out. And your channels are all reflecting Bitcoin that's locked up in these channel creation transactions on layer one. So there's the same scaling uh, limitation. Okay. So if you consider that layer one Bitcoin has a limitation as far as how many people can actually transact on chain at the same time, it's the same story as far as creating and also closing Lightning channels. Now, the interesting scaling conversation you can have about Lightning is considering the assumptions around that layer one limitation. What can you do to then have sort of robust, routing of sats in between the open and closing of the channels? And that's where you see, the entities that create very large liquidity on chain, they're incentivized to actually keep their lightning channels open as long as possible. And there's some strategy there. There's some strategy involved in channel creation, because you want to keep in mind that that's where you run into that layer one limitation. So people who use Lightning um, in a sort of institutional kind of context, they plan ahead for these things. They closely watch the on-chain fees. They make you'll see lots of activity happen at these moments. I remember specifically about a year ago when the fees first kind of came down from that initial frenzy around ordinals and stuff on chain. You saw a lot of Lightning providers do a lot of moves when those fees came back down, and so that's kind of like the part of things that's not immediately intuitive to people who don't use Lightning in a sovereign way. Is, you have to basically acknowledge the limitations of layer one and then understand that creating channels and closing channels is something that touches on that limitation.
Sorry, TC. So if you had like in my example where you have a payment processor that essentially wants to start a Lightning Rails, point of sale terminals and kind of scale out this thing to, let's call it 100 million end users, right? Would they be best? Would the best solution be a layer three, because the layer two would be impossible to manage with 100 million users?
Well, I mean, it's you're not talking about layers, you're talking about applications there. So,
Right. But how do
a
they
payment
how do they
processor.
how do they balance the nodes, right? Because there's no, like, one node can get drained, right, and then another node can get drained. Do you have to, when you re-up that node, do you have to then make an on-chain transaction? Is it just, does it turn into,
No, I mean, I think you're kind of thinking of the nodes kind of like buckets that you fill with sats. It's not really, that's not exactly the right model to think of. You
It's
need
the
to think in
channels.
terms of
Yeah.
channels. You have to think in terms of channels because that's how the system actually works. So a single node can have as many channels as they want to set up. And then within each of those channels, there's a certain amount of liquidity. And that liquidity is either outbound or inbound. If it's outbound, then you think of it on that node. If it's inbound, then you think of the liquidities on that channel partner side.
got
It's
it?
on your partner's side, not on your side.
So
And when
when the
when a
channel,
payment goes through, they are using your channels in one of two directions, either towards you or away from you. So in theory, if a bunch of transactions routed through your node and was just taking a bunch of liquidity that you had on your node and sending it to your channel partner side, that would essentially be this phenomenon you're talking about, draining the node. But it's not really draining the node, it's just
it's
pushing the
draining the
liquidity
channel.
to all the channel partners. Those transactions go both ways though, and that's the whole thing in terms of managing a lightning node, is you have to pay attention to that. If you have a bunch of outbound liquidity and all the routing takes that liquidity to your channel partner side, you do need to rebalance those channels so that you can actually continue to do transactions in that direction. It's an ongoing maintenance thing. It's not intuitive to a new user. It quickly becomes intuitive if you actually use the thing. But most people who are building applications that want to use Lightning payments, a lot of them see a benefit in partnering with services. And that's where you have these Lightning service providers. And there's a number of them out there that basically will take all of that management out of your hands, of course, for a fee and for a cost. And you basically integrate with a Lightning service provider who provides you with channels and liquidity and availability, and they take all of that concern off your plate for a cost. And that's what I think a lot of businesses see as a valuable service to employ, because they don't want to start the learning curve and have to deal with all the management of those things on a day-to-day
Yeah.
basis.
So,
They'd rather pay a partner company a service to handle that for them.
ATC, just to give it an example, this Darkside used the example of Starbucks. Okay. And I think that's extremely improbable for them to do that, to set up the channels, for the simple reason. And one of my clients looked into it. They're not Starbucks, but they were trying to deploy Lightning, and their frustration was that ultimately, to have a node with funded channels, you're effectively exposing a hot wallet and all the security exploits and the large surface of attack, exposing a large
Sorry,
surface
everybody.
of
Joe's getting
attack
a call.
to. Can you hear me?
Yeah,
Yeah, you're
you
fine. You
got a
just cut
call or
out. But
something.
yeah, no, go ahead. Yeah, go ahead, Joe. We can hear you.
I was just saying you're exposing, if you're having, by virtue of having an open channel with a lightning node as a business internally, you're exposing a very large surface of attack. And this is what the conclusion of two of my clients that were looking at deploying this was, that they would rather go through some third party provider rather than setting it up internally, as their own lightning node. So the idea of like a Starbucks setting up massive channels and nodes, it seems increasingly improbable given the surface attack vector.
Yeah, that was my
I think it
question. Did
depends. I think the cost savings are going to be the answer to that, because a lot of the payment processing, the legacy payment processing, is a major line item in the operating balance sheets of these businesses. The 2-3% that you can expect that credit card processors are going to lop off the top. If you can save that, that's massive for certain businesses depending on your profit margins. And so there will be incentive, I think, for certain businesses to look into this, because it's one of these things where, of course, it's work, it's a hassle, it's not immediately intuitive. That being said, a year down the road of actually engaging with it directly, it is intuitive and it is something that's doable. And you maybe have a team or a set of people in your business that are dedicated to managing that stuff. I think certain
Yeah, if you
businesses
have
will
users,
will
if
find
you have
a benefit
users,
there.
yeah, but TC, you got to have users, right? If you've got four people that are going every month to Starbucks to use Lightning, that's just not. And we're building where Bitcoin is in its evolution, right? Is building out a store of value. You don't have a bunch of people even wanting for tax reasons for other to use Lightning channels. That's the issue. So you got like a chicken and
well,
an egg problem.
yeah, well, maybe not here, right? Not in the United States, but I'm kind of just trying to get my arms around, what are the opportunities for areas of the world where, they don't have acceptable payment rails, right? So, there's billions of people out there that are unbanked that this could be an amazing solution. So, to your point, Joe, I don't think this is coming to Starbucks anytime soon, but we're just using that as an example to
Yeah,
try to
but
get our
but but
hands
all the
around.
payment, the majority of the payment processors are all housed in the United States. We're the financial service hub of of the world.
No, of
So you
course,
can
of
say like
course.
there's billions of people out there, yeah, and there are niche cases, right, where you can do that. But unless you get the big boys involved, they deploy it to the world, they deploy it to the billions. So it's kind of it's a chicken and an egg problem. You need to get the demand. Demand needs to exist, and for the demand needs to exist, you need to have policies that encourage the big boys to get involved.
Yeah, I agree that it is a bit of a chicken and egg thing. That being said, we're closer today than we were just a couple years ago. When you consider that a lot of people walking around who are walking into Starbucks and buying coffee might have a Cash App in their phone, or a number of other apps that maybe have that payment option. What you see in the real world is sort of incentive creation. And so it's up to the businesses as well to say, Starbucks could say, hey, 10% off your latte if you pay with Lightning, and you're going to see a major increase in the number of people taking the steps to see, okay, well, what can I use to get that discount? Oh wait, I can just use my Cash App, or I could use my PayPal app, or there's a lot of different things that become much more practical and available as the sort of legacy platforms continue to integrate. And so it's just something to
Hey,
watch. I think you're going to
yeah,
see
definitely.
a crossover really accelerate there, over the next 4 or 5 years.
Hey, TC, real quick while I got you, why is it that when I have repeatedly tried to use Cash App and other Lightning wallets that I constantly have failures? I mean, I would say there's a failure rate of at least 20% out of every one out of every five transactions. Why is that? Can you explain technically why, after all these years, it's still failing, even with like major, apps like Cash App?
Well, I mean, I don't really know what their Lightning service provider is, or what they're doing with Lightning directly themselves, but that sounds like channel management stuff. Typically, Lightning payments fail because you're either sending a amount of sats that the channels are not easily available. There's much fewer routes as you increase the amount of the payment, um, and depending on the fee markets at various points, and then also just depending on the technology executing the transactions. There's not a single answer to that, and it's going to be different depending on every single app you're using, because they're going to have a different set of resources available in the form of either their Lightning service provider or their own channel management that they're doing, and all those things are going to impact failure rates.
Thanks.
Can I chime in here on this discussion?
You just did. Go ahead.
Thanks, guys. Yeah, I think this is a really good discussion. And TC, I'm kind of with you. And Joe, what you're saying as well is valid. I think it's just an adoption curve, like a lot of this stuff. One thing I wanted to go back to this, I guess, for everyone on the stage is I'm trying to understand the scaling component of this. And like, so let's just assume, right, that it does get adopted, that we get to a large scale on something, whether it's Starbucks or somebody else. And from my understanding, Lightning sort of fixes the scaling issues of Bitcoin by sort of abstracting out from the block time and saying, look, we're going to settle these things later, whenever the person picks up their funds. Um, so what is the scaling? What is the scaling problem? Like, does anyone understand? I think Lynn was saying, look, a certain amount of people aren't going to want to do. They're going to want to do custodianship. They're going to want to have someone, a custody holder. I get the scaling there, but is there a technical scaling issue, or could it scale infinitely? Because I believe it can. I believe it can scale, but am I wrong on that?
The scaling issues are all about the same scaling issues on layer one. It's to say, if you had 8 billion people try to self custody today, they can't. You can't do
Right,
that
right,
volume of on-chain transactions within a short amount of time. The
right.
Lightning
But
Network is integrated into layer one in a very particular way, where every single channel that makes up this network of sats that are able to be sent from point A to point B, is facilitated by channels. Every single channel had to do an on chain transaction to be created. And if the channel is ever closed, that's another on chain transaction. So instead of thinking of it as, oh, we're deferring settlement until later, you want to think about it in terms of on-chain transactions are being done to create the plumbing through which these Lightning payments can occur. Now, that being said, an end user of Lightning can have this amazing magical experience of practically free, practically instant sats being transferred when they're using custodial Lightning situations. So you get a wallet of Satoshi, or you use some other app, and you didn't run a Lightning node, you didn't open up any channels, you didn't have to think about any of that stuff. You just see a Lightning invoice that someone's presenting you, and you snap a picture of that QR code and say send, and boom, it happens, and it feels kind of magical. And most people who are using Lightning are using it in that way. Basically, other entities, other people, the people that run those apps, the people that create all of that Lightning infrastructure, are actually doing all the hard work of providing the liquidity and creating the channels, and that makes up the network itself. So it's kind of a similar thing to on layer one. You've got a lot of users that have some Bitcoin on an exchange somewhere, or they might hold an ETF. They're not directly using the network, right? And it's only once you actually create an on chain wallet and take self custody and maybe run a node, you're using that layer one network. Lightning does as well. So that is the scaling limitation. The scaling potential in Lightning has to do with the fact that, all these end users of Lightning can utilize the services and the infrastructure that those direct participants have created. And so there's a lot of debate there. There's a lot of people that feel that that's, I think rightfully so, that's really exciting, and there's a lot of potential there. And also rightfully so, there's a clear trend towards tons of people, the majority of people who use Lightning, using a custodial wallet, and they never actually run a node, and they never actually deal with channels. and they're just end users of that plumbing that somebody else is taking care of. So that's the kind of unintuitive thing with Lightning is a lot of people use it and they're like, oh, this is awesome. It's free. It's fast. It's so easy. Um, and you see that scaling potential of all these little micro payments and all these people could be doing coffee transactions all day long and it works. But the scaling limitation of Lightning is on that creation and closing of those channels. So if you want to see the network itself, that plumbing grow on a large scale, you run into that same limitations of layer one. I hope that makes sense.
Yeah, TC, I think maybe piggybacking on what you said there, like when the runes thing came out and these, pseudo high fee environments that really put this all to the test, it actually, made us think, hey, in potential high fee environments in the future, we could run into problems because nobody wants to close their channel like that because, they're going to be in the hole. So I think like I had friends trying to move money. I was trying to move stuff around in Lightning during then. A lot of channels they weren't closing because nobody wanted to close during those high fee environments. So I think that's another thing to speak of. The liquidity issue that you talk about, which is, hey, we can't do, large transactions. So it's a nice right now. It seems like it's a great way for micropayments and not in a high fee environment. So yeah, I mean, I think there are obstacles, and I think that it's not. It's often the Lightning Network is often preached as if it's the savior of all of these other issues. But I think we do have some bumps in the road to overcome before it's,
Look, it's
something
like
that's
everything in Bitcoin. It starts out as a meme, and that's where it should start out because that's how you start understanding it. And then as you start filling in the details and getting higher definition, higher resolution understanding, there's tons of caveats and there's also paradoxes. And everything in Bitcoin is like that. There's trade-offs everywhere. So Lightning Network is amazing when you think of it in the context of what trade-off you're making. Anyone who just tries to fixate on the meme, oh, this just scales Bitcoin and now it's free and instant, you're going to run into the limitations of that oversimplified understanding. That being said, it's exciting because there's a lot of other layer two activity going on. There's a lot of people pushing to innovate other approaches. And I think I see clearly a world in the future where you're going to have just a shitload of options. And then as the end user, you're either naive about it, you just use the application that feels comfortable that you understand and don't even think about technically what's happening under the hood, or you're a little bit more savvy of a user, you strive to understand these things, and as you understand more, you actually have more optionality, you have more choices, you have more dynamicism, and in adopting a better perspective and more tools, you give yourself just more flexibility and more power in the system.
Yeah, that was well said. I totally agree. I mean, you can use the analogy of, the current monetary system where nobody knows what the hell is going on under the hood, and it's probably going to be similar in the future with Bitcoin. But I know you mentioned other tools, and we briefly, talked about Fedimints and things like that. I've always been curious about the thing that Samson has going on with the liquid. Are you an expert on that at all, TC? Or I'm
I'm not
very
an
foggy
expert
on
on
it.
anything. I just someone who cares about this shit to the
Well
point that
said.
I try to dig
Touche.
into it and wrap my head around it as much as I can.
Yes, I like that answer. That's great. What do you know about the liquid thingy bobber
Well,
network,
liquid is a
whatever it's
side
called?
chain.
Yeah,
So it's
and it pegs in and
basically
out.
it's basically something created by Blockstream, and they created a side chain, and it's LBTC, and it's basically pegged one to one to Bitcoin, and you can basically transfer Bitcoin over to them, and you get one to one liquid Bitcoin, and then you can transact in that network, and then peg out anytime back to Bitcoin. The trade off there is that is very much a sort of trusted set of transactions. You have a federated set of key holders that run that side chain, and in theory, they're able to rug you if they want to. There's a lot of sort of characteristics of that network that might give you benefits that make those trade-offs worthwhile in certain use cases. I know people who have used Liquid happily because they like some of the sort of privacy benefits they get from it. I know people that, do sort of submarine swaps back and forth between BTC and LBTC, because you kind of create a new on-chain footprint when you're pegging out of liquid, and that's something that some people see a benefit in, and that's a fair trade-off. While you're in liquid, there's certain sort of privacy aspects that are, slightly different than on Bitcoin itself. So it's all just trade-offs depending on what you're trying to achieve. But essentially, um, it's kind of just a, it's a Bitcoin stablecoin. That's what liquid is. It's basically just a peg to Bitcoin, and you have another token that represents it. And I've never heard of anyone, losing their peg to Bitcoin going in and out of liquid, but realize it is a side chain. It's not Bitcoin. It's a separate network, and it is a trusted thing because it's run by a federated group of um, authorized parties.
Yeah, and maybe just taking that a step further, if you're going to operate in a trust environment, a Fedi mint might be a better way to go. I would imagine you may agree with me on that one. Maybe get into
It's
what
just
that
different.
is. Yeah,
Fedimint is a federated version of this e-cash paradigm that a lot of people are excited about. E-cash was created by David Chaum. It's a cryptographic way to do blinded signatures. And without getting too technical, it's basically just this thing where you basically have an entity that's called a mint that issues these eCash tokens. And in relation to Bitcoin, what Fedimint has done is created a system where you create a federation of participants that form a collective mint. And so you send sats into this federation, and they issue you sat denominated eCash tokens. And in that issuing of those tokens, because of the blind signatures, there's some really big privacy benefits there. That being said, same kind of thing I was mentioning before, there's the potential in theory of that federation rugging you. It's a trusted relationship. That's part of the trade-off. You send sats into that Fedimint, you accept the fact that you're dealing with, a centralized group of authorized individuals or entities. And so there's a sovereignty trade-off there. But the benefits are incredible privacy. In theory, if there's enough people using a mint, the mint has no idea who they've issued those tokens to. They also have no visibility over what happens to those tokens while they're being held. And the user, as long as the mint doesn't rug, has the ability to unilaterally exit from that mint and get the sats back on Lightning. So it's actually a pretty exciting thing. The use case I keep thinking of with Fedimint is, imagine going to some like outdoor market or bazaar somewhere in the world, and as you're walking into this market, you change your outside money into inside money that works inside there, and you transact. Nobody has any clue what you're doing while you're in there, totally private. And on your way out the door from the market, if you have any left, you exchange it back for the outside money and you're out. So I see a ton of uses for eCash, most of which are with smaller amounts in general, and definitely with very short, sort of defined lengths of time. It's not the kind of thing where I would want to leave any large amount of money over any length of time. But there's all kinds of micropayments and, short-term use cases where this is really powerful, and the privacy benefits are awesome. And the transactability of these things are crazy. My favorite example is what Yellow did. Yellow took literally one sat in eCash. And because it's eCash, that means it's literally just a long alphanumeric string of text. You can take that string of text and you can send it to someone else in any way you want to. What he did was he sent it to himself, but he took the string of text and broke it into three pieces and put it into the memo field on three different bank transactions, and then took the three pieces and stuck them back together and redeemed his one sat on the other side. It's kind of wild when you consider this is literally a bearer asset in the form of text. You could send it in a text message. You could write it with a pencil on a piece of paper. You could, send it in a DM. It's just incredibly flexible in terms of how it moves from one person to another. And of course, the trade-off there is there's an incredible number of ways that you can lose it. It's not very secure. And so, again, like the exciting thing to see is there's new sort of use cases and logistical characteristics that are unlocked with this, but there's all kinds of trade-offs you're making to get that. And typically you're trading off sovereignty or security. And that's the common theme with all of this kind of layered monetary systems is you're on layer one, your highest level of sovereignty and security. And as you move to higher layers, you trade some of that sovereignty and some of that security for more privacy or more flexibility in how you can move it around and that kind of thing. And then last thing I want to say is I don't like talking about Fedimint and not mentioning Cashew. Cashew is another e-cash on Bitcoin paradigm that involves a singular mint entity. So instead of a federated group running the mint, you have an individual running a mint. Anyone who runs their own Lightning node can install Cashew and run their own Cashew mint. And you have sort of more flexibility in terms of being able to spin up mints. You and your buddies can just spin up a mint and run eCash amongst yourselves. But of course, whoever's running the node has the ability to rug everyone on there. So trade-offs again.
Absolutely. I think I've heard in the past the analogy of casino and poker chips, where you go in, buy the poker chip and do your thing with the poker chip, and then when you're leaving, you cash back out. Just to get back to what you were saying earlier about that. This is super exciting to me because really this is super super early, and look what we have already. So there's some devs behind the scenes really doing some cool stuff. Got some brilliant minds back there working on these things. We don't need all these alternative things when there's stuff being built on Bitcoin. So to me, it's exciting.
Yeah, just to wrap this up or sort of put a bow on this conversation, I think for people listening, it's important to understand like what we're talking about. I think a lot of people are so excited is that it's leveraging Bitcoin. It's new tech being built, but it's still leveraging the same 21 million tokens, the sound money. And yeah, TC is saying like when you give your Bitcoin over to, let's say, a Lightning Network or one of these other service providers, yes, they can take your Bitcoin potentially, and that's a risk, but it's still Bitcoin, so it's still the sound money, which is what makes this all different from, like, let's say, meme coin, the whole meme coin world, where it's literally just random stuff being spun up out of nowhere. There's no sound money behind it. So I look at all this stuff as the rails. When we talk about the rails, like these L1s and L2s off Bitcoin, it's just the rails for the sound money. Can people hear me? I'm not hearing anything.
Yeah, I heard you, Jesse.
Yeah,
Okay.
sure. Yeah, sorry
Our
about
our
that.
hosts have all fallen asleep.
Yeah, no, sorry about that. I was busy orange pilling somebody. Feel really good about it actually.
There
Um,
you go.
let's see. I'm gonna bring up some speakers here. Grant Cardone, how you doing, my friend?
Yo, what's up, man? What's up, guys?
What's going on,
Having
Grant?
an awesome
How are
day.
you?
What's up?
I'm trying to hang on to the dream.
I saw you on Fox Business the other day.
Oh, thank you. I hope you guys enjoyed that.
Grant, are you running
Absolutely.
promoted posts, promoted ads, or anything like that? I don't know why, but I have you blocked.
Oh, wow, bro, you blocked me.
No, there was a long
You
period
know,
of time where any promoted ad on my feed, I would just block the person who did that. I was like very anti-advertising. Are you doing that anymore?
we might be, bro. That's not a reason to block somebody, bro.
You confused him with Gary, TC. They're twins, but they're different.
I don't think my
I'll
brother's
take
by
the
an A.
block
They're
off.
not
I'll take
twins.
the block off. I think it's a legacy
I
thing,
can't
but
I can't imagine my
No,
brother.
I'm
be
just
warned.
teasing. Grant, yeah, Gary's not running ads.
Yeah, but I could be. I could be. We spend about $2 million a month on Facebook. So, but man, don't hate an advertiser, bro. I'm trying to help Elon.
I got a question for Grant about the story about the Humvee. Did you give a Humvee to Gary for playing Halo and losing?
Dude, we were gambling. I think it was a game called Red Faction. I don't think it was Halo. It might have been Halo, but there was an old game on Xbox called Red Faction. It was fantastic, and we'd played that, baseball, and Halo, and the other one, Mortal, not Mortal, the famous one, the big Battlefield game, Call of Duty. And yeah, I lost, I don't know, 60 grand to him, and I'm like, bro, can I just send you this Hummer that I have? And that's how we settled it. So I shipped the Hummer across the country. I didn't even clean it either, by the way. I sent it to him dirty, and it had a bunch of dog feces in the back in the
That's
because
messed
I had
up.
these two big Great Danes. Yeah, yeah.
He
So
put that he put that there on purpose. He scooped it over the long one
yeah,
and threw it
yeah.
in.
We had these four dogs at the time, so I'd take them out every day, and the place smelled terrible. So he got a shitty Hummer.
How are you feeling about Bitcoin these days?
Of course, I mean, nobody likes anything when it goes down, right? It gives a little bit of quiver to the stomach, like whether it's real estate or any investment I've ever had. Just reminds me of, did I do the right thing? Challenges my conviction a little bit. Um, that's the problem with liquidity. The reason I love real estate so much is like whether it goes up or down, it's not like I can do anything about it today. So,
Dark side. This is where
and
you chime in and
when,
you say you're lying about Bitcoin isn't volatile. 21 million.
yeah, but the liquidity, the reality that I have a choice to sell at that moment, that's where I think people. And I just tell myself, hey, just treat it like real estate. You don't need it. Add some right now. I just put an order for 20 more pieces.
Smart move.
20 more sats. That's amazing, Grant.
Yeah, I think somebody zapped me 20 sats on the
I
Orange
don't.
Pill app.
Yeah, 20 sats. Thank you.
Hey, somebody donated 100,000 sats to my website. Thank you, whoever you are. Really
Oh,
appreciate it.
congratulations. Nice. Yeah.
I
Hey,
have
if you
another
guys want to
question.
speak to, throw your hand up if you're new on stage and you want to get a word in. We're willing to go ahead and change and shift subjects or whatever. Go ahead, Jesse, but just anybody new, throw your hand up if you want to interject here. Jesse.
Yeah, feel free to raise your hands, guys. And um, just a question for Grant while you're here. Like, do you have any connection these days with Elon or the administration or the crew? I think I saw you maybe at some of the events. I'm not sure, but are you hearing anything from them, or are they pretty tight-lipped, or just curious?
Yeah, no, Elon doesn't call me for any input.
And so, did you get into the game through Gary, or like what brought you into BTC? I know you got the real estate stuff going, and you're flying
Oh,
through.
I was given, yeah, I was given some Bitcoin in 2013 for a speaking gig. That's how I got introduced to it. And I've been buying it for 12 years quietly while I built out my real estate portfolio. And then in about, I don't know, 4 or 5 months ago, I've been trying to figure out ways to combine real estate and Bitcoin. And 4 months ago, maybe 3 months ago, we started a real
Yeah.
estate Bitcoin fund. We oversubscribed it, and it's been very successful so far. And we're going to do 10 more of them. So,
Can you?
and then I've been listening to Gary. I've been listening to Gary talk about it for quite some time now.
Yeah, must be nice to have a brother who's deep in it, and then you doing your real estate stuff. I mean, what do you? Can you maybe explain a little bit more how that's working with your real estate business and how Bitcoin's tied into it? I read a little bit. Seems pretty interesting.
Yeah, we buy real estate. I mean, we're opening our second fund right now for a deal that's going to be about 100 million. And the real estate has to be under replacement cost for this to work. So we'll buy a deal for, let's say, 100 million, add $10 million worth of Bitcoin at purchase. So we'll close the fund at 110 or 112, something like that. And then I'll buy it with cash, with fiat. I buy the Bitcoin and the real estate, close on the transaction, no debt. And then I offer it to the marketplace at the same price that I'm in it at. And then people take their positions in this now 100 and let's say $12 million fund. or whatever the number is, and the real estate the real estate should kick off. This is institutional quality real estate, class, great locations, A plus property. Like, we're not surrendering on the real estate. It's great real estate combined, and we combine it with each month buying more Bitcoin with the cash flow. And then it's just sit and wait, and either borrow money against get a mortgage on the real estate in the future, or get debt against sell the real estate in the future and keep the Bitcoin, which we at this point we would have gotten for free
Hey,
basically.
Grant, did you
Or
ever
yeah,
consider we had talked about it once or twice before about the idea of one of your future projects in this related space where you would uh, allow the tenants to participate through maybe slightly premium rents, where the longer they stay in your building and are good tenants, the bigger taste that they get on the back end to help improve your flows.
yeah, yeah. We're just not quite there yet. I'm very interested in doing that. I haven't figured out the sophistication because I have my hands full on putting 10 of these together and then bringing them to the marketplace where somebody could liquidate anytime they want to. Wink, wink. I'm trying to kind of walk around what I'm saying here, but like, if I could create a situation where where the real estate and the Bitcoin in a fund then become liquid, where you could trade it 5 days a week. That's kind of what we're working on. So until I pull that off, I think this other thing
Yeah, well,
is just
I
on the
mean,
back.
BlackRock's going to solve that problem in the next 18 months, I would assume.
They're going to solve what
Well,
problem?
they're gonna be able to, the tokenization of real world assets would be apropos to your situation where they tokenize your Melbourne project, and that becomes something that you
Yeah,
can trade on these platforms.
yeah, that'd be fantastic.
I just think,
Well, if
you
that
know,
happens,
it's not you tell me, but having good tenants solves some problems,
oh,
right?
dude. Yeah, most apartment buildings have probably a 40 or 45% renewal rate. Renewal means your lease came up and it's time to make a decision. And if you could get that number up to 75, 70, 65%, you're talking about your expenses go down, advertising costs goes down, um, your cost to redo carpets and paint, all that goes down. So you definitely want to keep tenants. So we're definitely looking at it. We already offer all our tenants get offered when we close a deal. We typically haven't closed our fund yet when we close a deal. So like the Melbourne property, 300 tenants were offered to invest in the real estate. Uh, and then we closed the fund sometime after that. But even when you give a tenant an opportunity to invest, not just pay rent, they feel better about you.
Well, I mean, just going from 45 to some higher number, 65 or 70, lowers your cost, improves the property cash flow, and then you reduce the shithead factor on tenants, right? So because they have a stake in the place.
So Grant, the idea is to be able to get liquid. Is that right? On both the real estate itself and the Bitcoin, and then sort of give that optionality back to the fund holders and LPs. Is that right?
Yeah, well, we already have. Look, if you buy something with cash, that cash flows, and that the banks are always friendly on, which is I have the friendliest asset class in the world, which is apartment buildings with no debt. So if you have no debt and you go to a bank and say, I own this, I'm not trying to replace debt. I own it and I want to put a loan on it. I mean, the Fannie Mae, Freddie Mac, New York Life, MetLife, the line of lenders for that is endless. Now I have competition for a loan. So that's liquidity. That's instant liquidity for 50 to 60% of the deal on the worst of days. Then I have the Bitcoin. Let's say I have 15 or $20 million worth of Bitcoin there. I mean, I can borrow money on that today. Would I? No. But let's say we combine the two, and I have 100. Let's say I had $110 million worth of real estate in Bitcoin, $10 million of Bitcoin, $100 million of real estate, and I wanted to put a $60 million loan against 110, and I have real cash flow. That's going to be a new product. That's not going to be, that product doesn't exist today, where you'd get a hybrid mortgage on the real estate and the Bitcoin.
Yeah, and the thesis,
So those,
yeah, I was just going to say,
yeah,
Grant, the thesis there is that because the Bitcoin is hyper liquid, right? If you combine it with the real estate and go to the bank and say, hey, I want to borrow money, right? Let's say I want to finance 100% of this, of the real estate, right? And you have the Bitcoin
yeah,
sitting
yeah,
behind
exactly,
as this pure
exactly.
collateral that's liquid, it reduces the risk the
Yes.
bank's taking, and therefore, in theory, right, your 6% loan might become a 4% loan or a 3% loan because the bank's taking substantially less
Or,
risk.
or, or, you, Dark Side, because you're the first person that's gotten this. This is a new product, so you have to think outside the box. This is the most stable asset class probably on the planet. I don't know. Joe would probably disagree, maybe a little bit, but not much with me on that. Meaning the real estate, the apartments. These are apartments, not office. Okay, it's not retail, it's not industrial. It depends on 300 people. 95% of them paying their rent, and it cash flows. Now, when I take the illiquidity of the real estate, because I can't sell it, I can't get rid of it, neither can the bank, and I combine it with the liquidity of the Bitcoin. But more importantly, I provide um, this asset. I could literally get a 100% loan on this. I could literally get 100% debt on $100 million worth of real estate, and the bank would know at any given time they have 10 or 15 or $20 million worth of Bitcoin they can liquidate today. Because even if a bank takes over an apartment building, they can't get rid of it. They can't liquidate. They can't get any dough. And I'm not saying we would use 100% debt on anything, but I'm just saying when you put the two together and then give it time, when that $10 million of Bitcoin becomes 40 million, and you have $100 million of real estate and $40 million of Bitcoin, the story changes, and changes again if the Bitcoin goes up again. I mean, it just becomes. I can see a time where we'll have long-term mortgages, 12 and 15-year mortgages on a combined hybrid property of real estate and Bitcoin, where you could get 12 or 15 or maybe even 20 years of debt.
Hey,
And
Grant.
then if I take it public, anybody can liquidate 5 days a week
So, Grant,
because you'd have shares now.
Grant, imagine this scenario, okay? You have the $100 million in real estate, you have the $15 million in Bitcoin. You walk into the bank and they say to you, well, I'll tell you what, we'll give you a 1% loan on the real estate on the 100 million if you agree to split 50% of the upside of the Bitcoin with us 10 years from now.
Yeah, I mean, bro, you do. If I do that now, my real estate cash flows at 10% a year, and I'm buying more Bitcoin from the cash flow. So now
Yep.
the real estate's buying $10 million worth of Bitcoin every year. The resident mortgage combination between the debt. I don't know that I'd get 1%, but if that shit
I
happens,
think you would.
you guys are talking
Yeah,
one.
the
I
bit
think you
bonds.
would.
Yep.
If you yeah,
Dude,
this is
it's
the
amazing. It's
yeah,
amazing.
this is the bit bond scenario, right? Where I say to you to the bank, look, man, like I'll give you 50% of the upside of the Bitcoin. You have the downside protection, right? All I want is a 1% loan. I think they take that deal. I think there's bankers out there that will take that deal. I think that deal would be
The,
oversubscribed.
by who? The lender or by
Yeah,
the
by the
by the
lender. I
uh,
think
by the
I
investors?
think you'd have so many
Oh,
lenders looking to take that deal where they get 50% of the upside of the Bitcoin. They're writing a 1% loan, but they have very little,
yeah.
they have almost no, well, I shouldn't say almost, but they have very, very little downside exposure because obviously they can take your Bitcoin if you break the
Well, no.
covenants of the
The
loan.
first thing they can take. First thing they. Yeah, but the first thing they can take is the real estate.
Right. And they're backed up by
Y-
Bitcoin.
y- y- Yeah, exactly. So I mean, the real estate's always worse. Like particularly right now, we're stealing real estate. I'm 70% below replacement cost almost every deal that I'm looking at. Some of them more than that. So if you're putting even 100% loan on something that you're 65 or 70% of replacement cost and you can't build it now with the tariffs, by the way, the tariffs are terrifying builders to bid anything.
Terrifying
It
tariffs.
just
Hey, can we let Rusty chime in here? Also, welcome Puncher back. Hey, what's up, Puncher? Rusty, when one of these guys comes up for air, please feel free to just jam in.
yeah. I'm coming up for air right now. Okay, I'm just saying I get really excited because I
Yes.
showed this thing to Canner. I showed this thing to Canner Fitzgerald a couple weeks ago. They've been in my offices 3 times, saying, "Okay, how can we get how can we play on part of this?" So anyway, thanks for the time, guys. I appreciate
Grant,
you guys
that's a
letting me.
feasible
Yeah,
product. I mean, I bank these deals. I mean, you could do that easily. Is he still there? Yes.
Yeah, he's
Hello?
still around. Go ahead and we can hear you, Rusty. Go ahead and finish
No,
your.
no.
let's
What
go.
I mean, it's feasible to do that at 1% and use Bitcoin. I mean, you're almost talking about just straight up in simplistic terms of using a stock back loan at first, but to give a bank within means a range of what the upside is on the interest. And you're right. The biggest thing is just the fallback, and the real estate's it. That's all that's needed. Any bank's going to be excited after that on the upside of interest. Now, you know, this is starting to trend in more of a sounding kind of like a REIT territory. Correct me if I'm wrong.
100%. It would be
Okay. So
1,000%.
REIT has
Now,
different restrictions, but not much in terms of regulatory overcome, but not much. There is a different set of rules by our lovely government on REIT lending, but with Bitcoin and then Trump putting in all these new EOs, this is easily feasible because like you said, the biggest in lending multifamily, we have to stop giving out loans for them because they're such a cash cow. They just cash flow. And so you got to the only thing that comes down to it is looking at where it's located, the urban sprawl. But
that's right.
no, and you're right about the liquidation costs versus, I mean, really at the end of the day, it's more of a C&I loan than it is a CRE loan. So, but add the Bitcoin on top of it, and you're right about that, to loop it into yourself on a purchase basis of Bitcoin, totally different world. But yeah, you're talking a REIT situation. Am I wrong on that?
No, you're not wrong.
Okay.
That's what we're
I
thinking.
just
And
try making sure I understood.
we would basically, I would take the equity residentials in the Camdens of the world that pay a 3.5% dividend out, and maybe I don't even have a dividend. I'm like, no, we're a REIT that doesn't pay a dividend. We're a Bitcoin real estate Bitcoin REIT, and you can cash
Yep,
out anytime you want to, and we would
exactly.
get a multiplier on the real estate that nobody gets because of the Bitcoin.
You would get a phenomenal multiplier.
Dude, so we're open. I'm opening the second fund probably Monday. We got a couple targets, asset targets that we think work great. I got to get those deals assigned to me. So
Well,
keep pulling for me. Keep telling people about it, guys. So I don't have to
I
keep
mean,
talking
let me
about it, Joe.
know. I would love to look at the model or anything, but
Yeah, just go to cardonecapital.com. You'll see it there.
okay.
Hey,
Yeah.
Hey, Grant, it'd be interesting to include in the docs on the new property that the Bitcoin could be used in the fashion in which I suggested, right? So that, in the case of a refinancing, you could use the Bitcoin as a means, as a profit sharing tool with banks to reduce your interest rate, right? I'm not sure that wasn't kind of envisioned in the first project, but that makes complete sense to me. Because like you said, if you can get a 1% loan and you give the bank
I know, but
half the
it's
upside on the
brilliant, dude. It's
Bitcoin,
brilliant. I can't put that
You,
in a prospectus that we might do that in the future. Like,
the only thing you'd have to do is it have to look as though it were a cash secured, right? So cash secured loan you can go get all day long. All that is exactly how it sounds. You put it into a big account, uh, just a deposit account with the bank, and they'll always give you basically about a 2% or whatever is running at inflation or lower. So with Bitcoin, you could negotiate a 1%, especially if you give enough upside and wiggle room to have fluctuation. Most listed stock secured loans are going to run around. You're going to need it's about 50% wiggle room there. So, you're going to have to put up. So, for instance, if I put up 50% stocks, listed stocks, say Apple, just a quick example, then I'm going to have to come up with the other portion of it, right? Or the bank will put up the other 50, I'm sorry. So my stock 50% backs it. They'll give me 50% as long as I guarantee, and I've got good backing with the bank. So no, this is all very feasible. There ain't a bank in the world that wouldn't want to get into this opportunity right now. Now that everything has been basically signed off by Trump and Bessent. I mean, really, they've made it real, right? So
Yeah, I think Grant, I think these products are going to fly off the shelves, and kudos to you for being a front runner and being creative. And Dark, you got good ideas. So I think the bit bond thing, and just realizing that Bitcoin can basically be your collateral, your backstop, your upside, your optionality, your liquid. You just pair that with these existing things, and boom, you got new products.
I look forward to hearing Rusty speak Tuesday on the origins of the universe, quantum physics, and other exciting topics. Rusty, we've had some cool conversations behind the scenes, so I like your brain, sir.
it's a weird one.
So many intelligent minds in here, guys. It feels like home. Feels like my tribe. So I was curious about Grant's uh, California stuff. Haven't heard a lot about it. I know you were doing a tour across California. I didn't know if you were going to dip
Yeah,
your toe into
I'm on,
politics
I'm
or
on
what's
my way
going
there
on there.
tomorrow to talk to the
Nice,
RNC. I'm a keynote speaker there tomorrow, so I'm working on
very
my
good.
speech right now.
Keep us posted. Yeah,
Yeah, I'm there to see if they're ready to get pissed off rather than pissed on. You never know about the people in California. They might just want to be pissed on.
good point. There are a lot of us from California that are on stage now, so we definitely can understand what you're saying there.
If you're done with the piss and the poop, the rent controls, the most unaffordable housing in the country, the red tape and regulations, it takes 19 permits to rebuild a house there. To rebuild your house, it takes 19 permits. Then get on the bandwagon of flipping the state of California, making it red, and bringing common sense back to the state of California, and they can
That would
start.
be wonderful.
Wouldn't
Yeah,
it be great, bro? And how about
yeah.
how about how
Infra's
about we cut taxes by 50% the first year,
hell
and
yeah.
by the fifth year go to zero.
Go to zero. I know Infra's on board with that too because he's kind of stuck Californian. Infra, well, actually, it's
The
Robert
guy,
now.
the guy that I need help from, by the way, is in the room. Scott Pressler's in the room, and that's who I need help for too.
Scott, get up here.
Scott, I'm gonna flip the state of California. I've been inspired by what you're
Let's
doing
go.
in New Jersey.
Scott, we'd love to have you on stage. I think Infra was off mute there, so we'll give the mic to
But
Infra.
Scott is leading the way of inspiring people to do the impossible, what most people think is impossible, and making it possible. Flipping the state of California would be the greatest contribution I could make to America. Not just California, by the way, because if it flips, it's over forever. Then Scott doesn't have to keep working his ass off in Pennsylvania and New Jersey because they won't even matter.
Is Scott in the room?
Yeah, he's here.
Scott, put your hand up, bud, or put your make a request.
Send a request. Yeah, send a request. I've been looking for him. I can't find him, so I'll keep
He's down
looking
there.
and we'll
He's down there.
Hey,
send him a
you can
request.
drop me down, guys, if you need.
Stay, Rusty. Stay.
Okay.
Stay with us,
Yeah, we'll
Rusty.
we'll need to drop somebody down because we're overloaded. Lauren, go ahead. Can you handle that? But Scott's got his
Yeah, I'll work on it
request.
here.
I posted in the comments the next deal that we're looking at. And again, full transparency. I don't know that we get this deal, but we're close.
Somebody fat fingered the mute button. Go ahead,
Are
Scott.
we okay? I was just gonna.
Yeah,
Yeah,
you're good, bud. Go ahead.
hey, I got Scott up. I got Scott up. He's a speaker. Scott, how you doing, man? It's nice to have you in Bitcoin today. Up,
Can you hear Scott? Go ahead and
we
unmute,
lost
bud.
him again.
Darn it. All right. What is going on here?
Just request again, Scott. We got you invited up.
Yeah, he's trying. He's back in the room.
Today's been weird day. I've been glitching out the whole morning.
Yeah, I've had struggles too. Is Scott in the room with us now?
Yeah, he is. Just talk, Scott.
Hey y'all. Hey Grant. Thanks for invoking me. Yeah, I think there's room for growth definitely in California. And I mean, 2026, if Kamala does dare run for that governorship, I think that could be potentially a great gift to us. And I think most importantly, when talking to the Bitcoin and crypto community, the most important thing is if you guys want to see legislation and having the opportunity to make sure that the government is going to be Bitcoin friendly, et cetera, then 2026 is really important to keeping the House of Representatives. And I don't know if you were following it very carefully, but they were counting votes a month after Election Day in 2024, and they were able to take 3 to 4 House seats that we have such a narrow majority. And so I'll make a commitment right here and now. I'm working on shoring up Pennsylvania. I want to flip the New Jersey governorship from blue to red. And I'll make a commitment to come to Cali in 2026. And I especially want to focus on uh, re-electing Michelle Steele if she decides to run for her seat again. We need to get Mike Garcia back. I think he lost his race by fewer than 1,000 votes. And we need to protect, people like Valadeo that are in there, Young Kim, etc. And so really there is a lot of room. We won San Bernardino, we won Riverside, and much of Cali turned red in 2024. So Grant, however, my team can support these efforts. I want conservatism to do well nationwide.
Dude, that's amazing, Scott. DM me if your team can DM me how I can contact you guys because I hit you. I just hadn't heard back, but I'd
Oh,
love to reach out and get
this is
educated on this.
Scott. This is Scott. Scott. I've seen Scott all over the news and stuff. Ah,
That's
making
fantastic.
sense now.
Hey,
Let's
hey,
get Scott a
Scott.
bodyguard.
Scott, I want to personally thank you. I'm from Philly, and when I was in my 30s, I was active duty military, so I had to be really stealthily do this. That we have everything called the Hatch Act, so I couldn't be overtly political, but I was. And we overthrew the very corrupt leadership of the Republican Party of Philadelphia and we called ourselves the Loyal Opposition. And really, we did a sneak attack on ward leader meetings. We went out and we met these wards. There's 68 wards, I think. And the night they had the vote, which they had won for 80 years in a row, the Meehan family. So it was going back 80 years. It was Austin Meehan, then his son Billy Meehan, then his son Michael Meehan had run basically the Philadelphia Republican Party. And for those who don't know, they never ran any serious candidates. That was the deal. We don't run any serious candidates. We get some jobs at the parking authority, and we get some concrete for the family business, and then that was the evil handshake. And that's why Philadelphia was always just going downhill. So we came in, had a vote. We just showed up at these ward leader votes, made an impassioned plea, and we actually won. And a guy named Joe DeFelice became the head of the Republican Party. And Joe DeFelice, and I see you're saying, Joe. Joe really delivered Philadelphia for Trump in 2016. And if you win Philadelphia, if you don't lose by a couple 100,000 votes, Pennsylvania is pretty much red except for Pittsburgh. So Joe DeFelice, among more than any other person, was responsible for Trump winning Pennsylvania, and then hence the presidency. And but Joe then went and worked for uh, Ben Carson, Dr. Ben Carson at HUD. And sure enough, when Joe left, the old guard came back in and took over Pennsylvania. So not a lot of people know that. But Scott, what you're doing in Pennsylvania is just literally amazing. And I just wanted to say thank you. And I'm so glad you're here. And I get a chance to just personally thank you for what you've done.
Thank you. And I don't mean to dominate, but just two very brief critical things. So in addition to Cali in 2026, I'm going straight to Wisconsin after 2 days here in Pennsylvania because we have a Supreme Court election on April 1st. Now, a lot of people might say, okay, how does that impact me? How does that affect me? Well, right now, the court is 4 Democrats to 3 Republicans, and 1 Democrat's retiring. If we're able to flip this, then that protects things like voter ID. It protects things like map drawing. And the Democratic opponent has already said that if she is to win on April 1st, they will redraw the congressional maps in Wisconsin, which could potentially impact Republicans losing 2 seats in the House of Representatives in 2026. So as I'm trying to help people like Grant in California flip seats to Republican, we could potentially lose more seats by losing Supreme Court seats. So if anybody knows anyone in the Chicago greater area over there in Wisconsin, April 1st is such an important day. And then last thing, and I will shut up and I will go away. But in Pennsylvania, we have 3 Democrat Supreme Court justices. You may know these names. Puncher, you have the Wecht family, David Wecht. You have the Doherty family. And by the way, Doherty just had a state representative, a Democrat, elected, part of his family over there in Philadelphia. And then you have Donahue.
Are you
And
talking
if
about
we,
Johnny Doc? Are you talking about Johnny Doc or Supreme
I
Court
do believe,
Justice Doc?
well, the kid, the legislator, I believe is Johnny Doc, but the justice is Kevin Doherty.
That's John
He's
Doc's
the
brother. Yeah.
Yeah, there you go. And so we have an opportunity to actually reshape the Pennsylvania Supreme Court this November. And so, Puncher, please message me. Grant, I'm going to send you my information. But just know that we are focused on a lot of these very unsexy races that are going to have a national impact, especially when it comes to legislation and when it comes to the needs of the Bitcoin and crypto community.
Hey, Scott, Al Schmidt, who's now the Secretary of State, was part of our revolution. And then I still like Al, but he flipped and he's, less of a conservative for sure. But guys like Wally Zimmerlong, and if you know these names, Joe DeFelice, Wally Zimmerlong, Linda Kearns, I don't know if you know them, but I really want to introduce you to some of them. Wally is constantly fighting the Supreme Court in Pennsylvania over issues that are super important to both you and me. So I'd love to make that connection if it's not already there.
Thank you. Yes, I know, Linda. The secretary is not very fond of me right now because I keep calling them out for not cleaning the voter rolls. And so, yes, Mr. Schmidt is aware who I am. But Puncher, I'd love to work with you, my friend. And Grant, I just sent you a message.
Awesome, Scott. Thanks, buddy.
Hey, Dom Bay's in the audience. He can't come up yet, but he was reminding me of other California-related things. I posted it up in the Nest. When he is able, which in a few minutes, I think he's driving or in an elevator or something, we'll bring him up on stage and let him give a spiel about that as well.
I'll just chime in here. I mean, I love this conversation. Scott, what's up, man? You're just absolutely incredible. I'm from California. I live in Los Angeles. So the stuff you're talking about with Callie and Grant, you talking about that as well. These things are it's so important. And I'm just grateful that we have this medium of communication here on X. I mean, this is absolutely incredible. So, yeah, I just wanted to echo what Puncher said. Scott, you are just a warrior. And I think, I think I can speak for the Bitcoin community in general that we appreciate everything you're doing.
Scott, are you a Bitcoiner? Do you own any Bitcoin? Are you kind of deep in the community, or are you just kind of tangential?
Well, I'll tell you, as somebody, I support Bitcoin, and I don't even have a wallet right now. I don't have a personal wallet, so we need to change that, ladies and gentlemen. However, I will tell you that my organization, we really are leading the charge. So my PAC, my political action committee, is Early Vote Action. And last year, early in the year, right before the Nashville Bitcoin conference, where they had me come and do a panel there on BTC, we actually accept hundreds of different types of cryptocurrency. And so we take Satoshi, we take Ethereum, Solana. If there's Bitcoin or crypto out there, then we're using that to help elect good people into office that are going to be supportive of the community.
That's awesome. But we got to get you completely orange pilled because there is only one. Bitcoin is a protocol, and protocols, it's all or nothing. Protocols win the whole game. So there is no second best. Everything else is just a technology. And, technologies, I guess, if the winner takes the majority of the market, but I don't even know that any of those other cryptos, quote unquote, have any use case or value proposition. So you're always welcome here, Scott, because we're here every day from 11:30 to 2:30 or 1:30 East Coast time, depending on where you are. And lot of great minds in here, myself excluded, that can really get you thinking about Bitcoin. And once you go down the rabbit hole, bud, you never get out.
Hey, I
Thank
think
you.
Dom's in here now.
Well, I'm
Sorry,
eager to
go ahead,
learn.
Scott.
I just said I'm eager to learn, so I'm very studious, and I look forward to learning more about the beautiful orange culture.
You got it. Thank you, Scott. Dom, how you doing, buddy?
What is up, y'all? Happy Friday. Yeah, I was just hearing some California talk, and yeah, 2026 is going to be big. And I'm running in a race that doesn't get as much publicity, but I'm running for CalPERS, the Board of Trustees, largest pension in the United States, 500 billion in assets under management, funded at 75%, and serving 2 million plus active and retired workers in the state. So the campaign, I'm super excited. It's going to be a great opportunity to connect, opportunity and challenge to connect with 2 million plus pension participants. Obviously, super important. I'm sure y'all have seen in the news, that the pension often gets drawn into political forums and gets drawn into these political debates. Energy being a big one, oil, fossil fuels, like all kinds of stuff. So, getting a good investment team in place, aligning incentives, and depoliticizing the pension, just making sure it's there for the state, huge. So, yeah, thanks for having me up.
Got it, Dom. And Dom was hanging out with some New York City firefighters last night. They now live in Scottsdale, but these guys were crazy. They were telling me some crazy firefighter stories.
You were
Up in
hanging out with some?
Oh yeah, I was hanging out with him last night. Billy Hennessy's his name. Guys, I call him the one-man show. Billy Hennessy. The guy is an absolute riot. And
Oh yeah,
they were
Billy.
letting me in
Billy
on some
lives
of the
in.
funny, firehouse stories.
Yeah, he lives in Santa Monica, I think.
What's that, Dom?
Because he's been to. I think Billy lives in Santa Monica.
Well, he lives here in Scottsdale now. He's a buddy of mine, but he has a property out there. You may have run into him, but you can't miss this guy. This guy's larger than life. Just a super good dude. And back to Scott. Scott, I consider you kind of like, and don't take this the wrong way, the George Soros of kind of the conservative movement, because you see these races that, with energy directed in the right spot, have a disproportionate rate of return. And that's something that, like, a guy like Soros, I mean, he funds, to him what are nickels and dimes to get these DAs that are letting criminals out and just destroying cities and things like, so that on the good side, or on the good, with the white hat, you're seeing those same types of races, and really you get a disproportionate rate of return for the effort. So God bless you on that. Go ahead, Scott.
Well, I don't know whether to take that as a backhanded No, I'm just kidding. No, I honestly, George Soros, let's be real. Stacey Abrams, I respect her in that she's a strategist. I don't agree with her ideology, but I can look at people on the other side of the aisle and go, wow, okay, they're good at what they do. Their ideology is bad. But let me put in a context of why I'm focused on the Pennsylvania Supreme Court race and how it could really impact people's lives. So in 2020, the Supreme Court was 5 Democrats to 2 Republicans, right? The Governor Democrat Wolf, he shut down Pennsylvania during COVID and did an extended emergency declaration order. And the legislature at the state level tried to open everything back up. but the Supreme Court, that was Democrat, ruled the governor's emergency declaration could continue so long as he wanted, and the legislature could do nothing to stop it. So therefore, they allowed the closure of the Commonwealth of Pennsylvania. Now, the court, again, is currently 5D to 2R. 3 of those Democrats are up for retention. If we say no to them, we will literally, by a majority vote, by saying no, kick off and vacate 3 of those justices. Here's where the chessboard comes into equation. In 2027, if we say no to them, we will have special elections to replace all 3. I'm already looking forward to 2028 and potentially having President J.D. Vance in that year. So my chessboard is, if we play our cards right and we have success this year in 2025 and we replace those justices in 2027, we could turn a 5D to 2R Supreme Court in Pennsylvania to a 5R to 2D in just 4 years' time. That is how my head is working, and I appreciate the analogy to Mr. Soros.
Yeah, and that was a backhanded compliment. But just let me tell you, Johnny Doc ran the building trades in Philly. His brother, Kevin Doherty, is that Supreme Court justice. All of those guys are friends of mine, the younger guys, the guys, that I grew up with. They're Democrats. Up until a year ago, they were all Democrats. I think they still have loyalty to Johnny Doc, who's in prison now. But they are all now huge MAGA guys, to a person. Matter of fact, I posted a couple days before the election, I posted a picture of me down on 2nd Street in Philly. And all these kids were dressed as one kid was dressed as Donald Trump. All the rest were dressed as his bodyguards when the first assassination attempt happened. And that got like 50 million views when I posted that picture. So I guess what I'm saying is the base of the building trades are all now MAGA, and it makes sense. They're all getting squeezed. The money's bad. They're suffering from inflation. They got kids and tuitions and bills, and they're just having a tough time making ends meet. So that's fertile ground for what we want to do. The only thing that's helping them is the name Doherty, because they are loyal. So Doherty, I think, is going to be the tougher of the ones to get, but with the proper message, I know you can do it.
Hey, on this topic of like Dems that are now MAGA, I fall into that category. I'm curious, Scott, like, how are you seeing that across all of your travels, and like, what do you see in terms of the movement? Because I'm hearing it a lot more as people are more comfortable coming out and saying, yeah, like I was a Democrat and I'm definitely not anymore.
Well, welcome, number one. And I think the biggest thing that we can do as a nation is, when people change their minds, we need to give people more grace. And a lot of people might be hesitant to let in, former President Obama supporters or even Bernie Sanders supporters. But honestly, those are my favorite people. And think about it for a second. Obama in 2008 was an agent of change. I'm not saying he was a good agent of change, but he was a change agent regardless. And what is Donald Trump? A change agent. If you look at the Obama Trump voter, there are a lot of similarities in the people in counties that voted twice for Obama, but then voted twice and perhaps even 3 times for President Trump. And I think we can learn a lot from those people. And I think at the end of the day, we're seeing a lot of Dems reject what they especially sought this joint hearing addressing to Congress. And a big issue I'm finding, and I don't want to stray too far from your conversation here, but I think the men and women's sports is a big issue. And I think especially with how backwards that California has been, not protecting children, especially in that state, there's a lot of room to work over families in the state of California, especially with Democrats.
Hey, I think Infra had his hand up, but before I'm gonna dip, so Puncher, maybe you can make Infra Robert co-host. But I hope Scott has a good security detail around him, because he seems like a really pivotal figure in this movement. So anyway, great space today, guys. I learned so much. Love you all. Have a great rest of your day, and we'll talk to you next week.
See you, buddy. Thank you.
Hey,
Hey, before we get to infra, Scott, are you taking care of yourself? I mean, you've seen the things that are happening with like, uh, I don't know. You just see the kind of the security. Who's the guy I'm thinking of? Infowars. His one of his writers was killed the other night. I mean, I don't know that they made the connection. A lot of people are being swatted. It seems like you're pretty mobile, but just want to know that you're keeping yourself safe out there.
Thank you. Well, it's funny you should ask me that question, and I know this is a recorded space, so I understand what I'm doing. But I called my mom and dad today, and I said, Mom and Dad, I want to protect you. I said, please call your local non-emergency police, make them aware that your son, for lack of better words, is a quote unquote public figure, whatever that means, and make sure they're aware what swatting is. Tell them, we have no uh, interest in committing a crime, no interest in self-harm, of hurting others, etc. And I actually called my local police where I live, even though I haven't been home to my house since December. And I did a police report as well, just to have something on record, to have a timestamp. And it's unfortunate that we have to think that way, but I'm in a place in my life where it's important to be proactive and preemptive. So yes, I am taking care of myself. And although people kind of know what my schedule is, they don't know where I stay. And I have a very small cadre of people, that I can really trust and rely upon. So thanks for asking me, Grant.
And just to confirm, Scott, you are not suicidal, correct?
Correct. I do not have any information that would lead to the arrest of Hillary Clinton. I do not have that with me.
Outstanding. Well, be careful, buddy. Okay, sorry. Infra, how you doing, bud?
Hey
You had your hand
guys,
up?
yeah, I just wanted to make a comment. Like, I think I'm not a political expert, Scott, but uh, you know, from a macroeconomic standpoint, I've done a lot of work, independent, my own independent research on this. This is not, coming from somewhere. And like the more that I dig, the more that I find this same picture, which is declining real wages for decades. Depending on which metric you use, the real inflation adjusted wages for the average American have been just relentlessly declining for decades. And so I think that there's like an interesting opportunity. I've spoken about this with the Bitcoin guys, in Bitcoin conversations before, but I think that there's an interesting potential here for in the near future to have um, the kind of MAGA Republican base, right, which is very clearly not the neocon Republican, but this new kind of wave of the more populist Republicans. I think there's a ton of crossover with like number one independence. I think like economic populism, given how bad the situation is, and I can send you dozens of different charts or graphs or posts that I've made, but because of just how bad it is, like I think that not only independence but even like popu- the kind of Bernie Democrats, right? Like I don't know what to really call them, maybe populist Democrats, but like there was actually a lot of crossover between Bernie Democrats and Trump in 2016. So I think that even though if you take out the kind of pigeonholing, the very black and white boxes that people always labels that people like to always use, I think that there's a huge amount of the country that shares in the same economic pain, and we see this through the suicide rate, drug overdose deaths, all these different kind of societal metrics, declining birth rate. And I think that there's like this massive opportunity, politically speaking, for a party to kind of unite and target that sentiment, that economic populist message, which even Kamala had started to kind of try to veer off into, what didn't do a very good job in my opinion, but I think that that's an important thing, that where you can get a lot of the country to unite behind the shared kind of economic turmoil that we've been suffering over the past few decades. And so, yeah, if you ever want to talk about that, I'm always open.
I appreciate that. Well, and it may be very unpopular to say this, but I believe what I believe, and I'm going to do that unabashedly. I think the biggest crossover between Bernie populist and Republican populism in general is, look, we haven't had our eyes open to the difference between free trade and fair trade. And look, I understand that it's going to be a little bit of a difficulty, but I support the tariffs. I'm so tired of being the world's personal piggy bank. I'm so tired of other countries, excuse my language, screwing us over and us just being nice and go, oh, we're just going to continue to allow you to take advantage of us, or you're going to let us fund all of your wars, secure all of your borders while our country suffers. And furthermore, I'm tired of the free movement. And what I mean by that is, that's one of the reasons why I don't consider myself a libertarian by nature, is because they believe in free immigration and free movement. And no, I believe in a secure border. I believe in putting our nation first. And dare I say, to your tack and puncher about the working class union community, I think that is our biggest way forward. And what Trump is actually doing is brilliant, talking about the automotive workers. That's going to impact especially places like Detroit, Michigan. And we've seen blue collar working class union workers, maybe not the bosses, by and large, they're coming over because they realize that the Democrats are going to sell their jobs overseas with free trade, while Republicans are going to support them with fair trade. And I think that is the way forward.
Yeah, I totally agree. Globalism has been one of the biggest disasters, one of the most harmful policies that's been perpetrated by both the neoliberals in the old Republican Party and the neoliberals in the kind of Democratic Party. I would just point out, though, that that is one of one of my main focuses, is globalism and kind of exactly what it's done to America. And I would just say that, I'm in my early 30s. When I was younger, I remember some Democrats being, not a lot, but maybe 10% of the Democratic Party was against NAFTA. They were against admitting China into the WTO. They were the anti-globalists. And I don't know if they've disappeared, but I think that enough Americans have this shared experience. Now, it's going to be different in LA or Manhattan or San Francisco than it is, like you said, in Detroit. But I think, just kind of like broadly speaking, I think that we see that independents are now, the majority political affiliation, right? Like, fewer and fewer people, as political polarization has gotten worse, fewer and fewer people are Republican or Democrat or willing to say that they're one or the other. I think you see this growing share of independents that are, pretty unhappy with modern day politics. And I think that this kind of economic populism message that educates the average working person about the dangers of globalism, what it has led to, the hollowing out of our industrial base, the hollowing out of our middle class, the skyrocketing suicide rate that is the highest since the Great Depression. Drug overdose deaths being the leading cause of death for young men. These deaths of despair just going absolutely parabolic. All of these, I think this message is this is kind of my message, right? And I can tell you it's resonated insanely, way more than I had ever thought this account. I never thought that this account would do as well as it has, or resonate. The things I say resonate as strongly and universally. And so it's just my personal experience, with my personal, Twitter account, but it does seem like there is this massive, massive appetite, especially with young people, because young people have been the ones that have been hurt the most, especially as, hyper financialization has kind of taken off in the past 2 decades. So I think it's like a huge avenue that's very much worth pursuing. And two, I think it could help bring the country together in a at least a little bit more. if you could unite those kind of, old school anti-globalist, kind of populist Democrats, independents, and then you now have the MAGA populist base, that is a coalition that can never lose, in my opinion.
Oh, go ahead, Dark. Go ahead.
Hey, Scott, just to bring us back to voter integrity for a minute, I'm one of those guys, call me a conspiracy theorist, that believes that for the most part, he who counts the votes wins. Um, Beyond focusing on a few Supreme Court races, like take California, for example, how in the world do we bring that back to a rational voting mechanism where the populace actually has conviction that the votes are counted fairly and the winner is determined by the constituents?
Well, we're gonna bifurcate this into two different parts. Let's do the easy way first. The easiest way is if you want a system of elections that's going to help federally California, because we don't control the governorship or any of the state legislature, then we need to petition our members of Congress right now while they're in power for the next 2 years before the midterms to pass an election integrity bill. Now, the only thing that's going to be difficult is, it will likely pass the House, but we're going to need 60 seats in the Senate, with the filibuster rule, because the Democrats probably won't support voting no on cloture. They're going to want to have the filibuster. And so, do we tie election integrity to a reconciliation, to some sort of budgetary restriction that if, we're going to help California if they do X, Y, and Z? That's part one. Now, part two, it's going to take a little bit more time, and it's going to mean that members of the California community, it's incumbent upon you that we're going to need good people to run for office. Here's the strategy that I would take: that you're going to have to take over boards of elections. You're going to have to take over county commissioner seats one by one, locality by locality, county by county. And that's part of the strategy that we devised in Pennsylvania. So, just for a little context, there are 67 counties in Pennsylvania. The two major problem communities are, of course, Philadelphia, which is pretty much 7-1 Democrat, and Allegheny County, aka Pittsburgh. Now, that county is only 2-1 Democrat. Now, regardless, the sheer amount of votes for the Democrats that come out of those two counties alone led to 2020 being decided by 80,000 votes, for example, a very small margin. So part of our strategy was, as Puncher said, we knew that in order to win, we needed 20% of the vote out of Philly. And we knew that we needed 40% of the vote out of Allegheny County. You know what Donald Trump won by in the 2024 election? He got precisely 20% of Philly, and he got 39.6% out of Allegheny County. And in addition to stopping the bleeding in those places, we bumped up to the rurals big time in Butler and Beaver and all the places, all of flyover Pennsylvania. If you guys are ultimately going to be successful, we have to take over the people on the inside that actually count the votes. And furthermore, we need to bump up and inspire people that feel dejected in areas like Riverside, San Bernardino, Orange County, San Diego, and basically all of California. And if they turn out big time, well, maybe there is a pathway to victory.
Let's hope
Scott,
so,
please
brother.
come to. I was gonna say, Scott, please come to California, man. Please, we need you so
Yeah,
badly.
we really
We
do.
need you.
And Scott, I could promise you the young people. I live in LA, and the young people I know, if there was a youthful candidate, a younger candidate that had a good energy, that spoke about the stuff I was just kind of referring to, that brought a kind of economically populist message. Oh my God, like the young people I know, that would resonate so. I don't know about the older crowds, and of course, they're worth consideration, in an election. But like, as younger people become a larger share of the overall voting bloc, I really like, I know from my personal experience, it would do insanely well with the young people I know.
Hey Scott, just to throw it out there, if you give Puncher, myself, Robert a follow, we'll try to invite you to all the we host these spaces on a regular basis, and we'd love to get you up and get you in front of thousands of young Bitcoiners so you can kind of repeat the message because I think it's really valuable. I think these spaces are an untapped resource for your message. Bitcoiners in general tend to be libertarian and want change. So yeah, I would encourage you to give us a follow. We'll make sure we invite you whenever we have spaces. And if you have free time, you're traveling, you're driving, you just you're not working, and you can hop up for 20 minutes, 30 minutes, and give this message. I know I for one would really enjoy having you up on spaces.
Thank you. Well, I followed all three of you, and I neglected to mention one thing that's going to be critical to your success in California. And Grant, here's one of my biggest pieces of advice that you need to have a major marketing campaign on in order to mitigate fraud. This is critically important. There are a handful of states across the country that allow for mail in ballots to go out to voters when the voter hasn't even requested a mail in ballot. Those states are California, Washington, Oregon, Nevada. I think even maybe Hawaii does it, and I think Utah as well, which is interesting. Now, here's the problem. In the last couple years since COVID, 500,000 people have fled California and left the state. Now, here's a very important piece of the puzzle. In order for your voter registration to be canceled in the state of California, you have to actually mail in a voter registration cancellation form. How many of those 500,000 people do you think A, were informed on doing that, or B, actually went through the process of turning in a voter cancellation form? Now, why is that important? If they don't cancel, those 500,000 people are going to receive a mail in ballot in the state of California, which allows for ballot harvesting and allows for mail in ballots to be counted weeks after Election Day. So, if there is going to be hope for California, we must have a nationwide process that we contact all of the people that have moved away from California in the last 5 years, decade, maybe even 15 years, and make sure that they cancel their voter registration. And that could very well have a statewide impact and perhaps even impact some of those congressional seats that we're going to need in 2026.
Yeah, dynamic. Exactly right. Like, we have to get to a position of voter integrity. And I think that's going to be the biggest struggle. But I love what you're doing at the kind of the hidden races, right? That actually impact voter integrity. I think that's critical to us getting to a point that we can actually flip California for Grant and get him into office. Dylan, how you doing, man? We got a lawmaker from Iowa, Dylan Fillon.
Uh,
Billion.
uh, Dark side, it's Philly on, but it's great to meet you, Robert. It's great to meet you as well, and um, Puncher, it's great to meet you as well. I am not. I'm currently running for the Iowa House in District 81. I'm running in a swing district, but you know what? We got to run in these swing districts, and we got to take advantage of them when we get them. But uh, I'm currently running in a swing district right now, and I just wanted to mention to all of you that there are a lot of assembly seats in California that can flip, and we need to target those seats. And I love Grant, and I 100% support him and what he's doing. We need more people like Grant in California. I'm obviously not in California, but I have a lot of connections in California. Um, if we want a successful governorship and if we want to change things in California, we have got to flip the legislator. The legislator has the most power. Obviously, Grant, if he when and if he gets into office, he has power with executive order, but executive order is not as powerful as if he signed a law. So in order for a Republican governor to be in California and have a good governorship, we need to have the legislator. And one of the biggest things, and Scott mentioned it, is we need to have good candidates running for these state legislative seats. And if we don't have a good legislator, we're not going to get good laws passed. And in California, you would have a lot more power with elections if you get the legislator. So there's so much you can do with executive order, but you need the legislator. That's one of my main things I'm mentioning. So.
Thanks, Dylan. Appreciate it. John Bell, how you doing, man? John, hit the speaker button. Hit the mute button.
Oh man, I don't know why, but that little magic wand sits over my microphone button on my phone. Sorry. Anyway, this is great conversation. I am in Coronado, California, just outside San Diego, and wanted to say hi to Grant and Scott. I mean, what you're doing, it's just amazing, man. Everything you're saying is just rings true for what I see we need in California. And so I basically have 2 points. Number one, the easiest way for Canada or any outside country to avoid the tariffs is if they build plants here. Okay, so Toyota has them, Honda, BMW in South Carolina, in Alabama, and of course this provides construction jobs, it provides plant jobs, and it's ongoing, and it just resonates throughout the economy. And of course, there are some tax breaks that they give these companies that invest, hundreds of billions of dollars. Apple just made a commitment of, what was it, 500 billion, I think. And so that's point number one: is build plants here is a great way to quickly redo the manufacturing. And then I think I looked up Elon Musk's plant in Texas. I think he couldn't get it done in 12 months, but I think he got it done in 13 months. Imagine that, just unbelievable. So point number one, and then the other point is, I think our government in California is so been weaponized by the Democrats with the proposition process, if I'm saying that right. And I think that we could get a lot of young people behind the just what you were talking about, the financial populism. That's going to really take hold. And I really think that we could get these propositions passed, because that's really what I would call a populist operational mechanism within the state government. I'd love to hear your feedback. I hope I'm not off base by making that point, but I wanted to make it nevertheless.
Yeah, no, I think you're on base. I don't know. I'm not an expert on. Go ahead, Grant.
Oh no, was I supposed to say that? Wasn't for me, was it?
I'm not sure. I'm not sure who it was for.
Oh, I
Well,
don't.
I'll say that, the young people I know here in LA, that's like really the only thing that they care about. The some of the social or culture war issues, like on the margin, might matter to some of them. But like, just broadly speaking, 70-80% of it is, hey, I've never worked so hard in my life and yet I'm falling further behind. What's going on? That that's dominating by a wide margin. That's the dominating kind of factor that they're dealing with.
Yeah, I'll just add to that this year specifically, I became a single issue voter, right? And I voted purely on a Bitcoin first platform. And the reason why I did that is not because I'm ignorant, but simply because I really believe that we have broken money, and that the ultimate solution to so many of our problems is fixing our balance sheet, is getting control of our debt issues, and I see Bitcoin as the route to do so. I know this is a pretty political space today. It's turned into one, but I do believe that through the use of either Bitcoin bonds, a Bitcoin strategic reserve, different ways in which we can solve our dollar debt problem and get that under control. I think that in me is the only solution to what is a completely broken balance sheet. So yeah, that's why I think it's important for these political figures to come, and I really appreciate Scott, Grant, Dombe, Dylan, a whole bunch of political figures to start getting active inside the Bitcoin community, because we have to get this message out that as big as so many of our problems are, right? Sound money, a better balance sheet puts the United States in a much better position to move forward.
So
So
dark
I'll
side,
just
dude,
go ahead, Dom.
here's what's so great about that, and we know this to be true, regardless of what political party you're on, and the fact that the two party system can be very divisive, and it often focuses on the social issues. But when you say focusing on the money or Bitcoin, at least you're focusing on the money, right? And so the race that I'm involved in, which is the board of trustees for the largest pension fund, right? That's 2 million plus California working voters, and the turnout is historically extremely low. So as you navigate these social issues and these divisive social kind of like things with sometimes minimal financial impacts, the biggest financial impacts, right? The CalPERS put $100 billion into renewable energy and climate investments, right? And now you saw BP and a lot of the private side of that agreement is starting to pull out because there's a new administration. Well, who's left holding the bag? Do you think that the California pension is going to pull out of renewables? Probably not. So if that becomes non-profitable or unprofitable, then the workers lose, but yet they won't vote on this. And so one of the main goals of my campaign this year is to boost engagement, win, lose, or draw. I want to get California workers engaged into this so they understand how the system works. And I think that's going to be a key to whatever party you're in or whatever your goals are for 26, is like waking up more folks in the state.
I wanted to chime in here for all these political leaders and just also echo what Dark said, and a lot of people are saying. Rob is talking about this a lot. The young people, they're realizing that the money is broken. And for anyone running, I think this is going to become, like Dark said, like for me, it was a one topic vote as well. It was a vote for Bitcoin. And the more Scott and you guys, these political folks, the more you spend time in these rooms and having these conversations, you're going to understand that for the bulk of the young people who are trying to survive, trying to build their lives, it's all starting from the fact that we do not have sound money. There is no sound money until Bitcoin. So Scott, all you guys, like, I commend you. I suggest that you learn about this topic, because I think as the years go by, it's going to become, I call it the black hole. Bitcoin's a black hole. It sucks everything to it because it's the only answer. So really just appreciate you guys. Great conversation.
Hey, Grant, did you have any comments you wanted to make? I saw you come off mute.
No, I didn't mean to come off mute. I was just enjoying the conversation.
Yes, sir.
I wanted to respond to the proposition thing, because I think propositions are very important, because those are state constitutional amendments and they're very hard to get out. But I think, guys, California as Republicans, yes, the governorship is a very good target. But we also have to target state legislative races. I think that will really shift California, and there's a lot of flippable seats that we have to target, because there are some, like, I mean, if we target some maybe in the Los Angeles area, like, I'm just saying that can really help flip our numbers and give the Democrats less power to do more damage to your state. Because here in Iowa, a lot of seats that we target and that Republicans currently hold are a lot of purple seats. And Scott has his hand up, and Scott could probably speak to this. Scott, go ahead.
Well, hey, Dylan, and just to anyone that's not aware, Dylan is a young man in Iowa that worked tirelessly to support our president in that state. And so he's not just running for the legislature himself, but he has worked for an America First agenda. I will say to anyone that's interested in California that if you're in the LA area, I do believe that Nicole Shanahan is helping to fund a Recall Karen Bass campaign, and I think that's critical for voter registration, voter engagement, and at the end of the day, we can't have a very amorphous and nebulous just vote conservative. I think we need to ultimately have a goal and be vision driven and give voters something to work towards. And so I think the Recall Karen Bass campaign is a great way to keep voters engaged all the way through 2025 and 2026.
Was that Scott talking? Who was that talking?
Yes, that was me.
Hey,
That was
Scott,
Scott.
how long do you think that takes to happen, and then you think Caruso would just slide in right there? Wouldn't that all happen the same day or not?
Well, first you have to reach the threshold. You have a certain amount of voters that are registered in LA County, and you have to reach, X percentage points to even to reach the threshold, and then you're going to have the county recorder then make sure that the recall goes through, and then you have another vote on the recall whether or not Karen either stays in her seat or goes. And then you have to have an election, a special one, I guess, to replace her then. So it's a step-by-step process.
So Grant, there's two parts to the recall. It's basic. There's two yes or no questions. One, do you want to recall Karen Bass? And two, which person do you want to take the place of her? So, if you remember, if anybody remembers the Larry Elder recall election 2021, which they were recalling Gavin Newsom, there's two parts to the question, and in those two parts is what I just labeled for you. So, um, and another
Yeah,
thing
my
too
point is
is
it all happens the same day, I think, right? Like it's like, yeah, we want to recall her. Okay, that's done.
yes,
And then I
the
want Boo
the
Boo
election
to be
happens. Yes,
the replacement.
yes, and not only that, with the recall, they have a limited time frame to get the signatures. I
Yeah.
I don't know what. Yeah. So
And what's it cost? Doesn't it cost like $6 or $8 to get a signature?
I don't think so. The petitions, from what I know, is free from from the campaign that's
Yeah, but
distributing them.
somebody's got to run it.
Yeah, yeah, for sure. It depends on who they're working with, I think. So with that,
So it's not free. I mean, all I'm saying to everybody in the room, like, guys, if you want to make a difference, you got to get involved in this stuff, and money does matter. Because if you can't raise money to do this stuff, you can't beat these people. And
and it,
yeah,
and also, Grant, I think it's very important to have loyal volunteers to help this out because even if we have people getting like 100 signatures per county, like that can really make your numbers shoot up. So I think it's very important to have loyal volunteers and have a coordinator in each county, regardless of what race you're running in, to make sure you reach a certain threshold goal by so and so time.
and Scott, what I was planning to do over there was to go and offer my services to go do financial literacy for the people in California in the middle class, lower class. I'm like, because that's my kind of my front door to people, and show them how to get up, come on the come up, how to get up, and while we're there, and do it for free. Do maybe 50 or 75 of these over the next. We could easily do that in 90 days. I could do 3 or 4 a day. You could do 3 or 4 a day in LA for probably 2 weeks in a row. And then while people are there, educate them on why politics matters to their finances, how to make housing affordable so they can actually get a mortgage one day, and make that California dream, the American dream, possible for them. And while they're there, do the recall. The first time we went over there was 72 hours. We had probably not your crowds, but we had probably 500 or 600 people there without any advertising or promotion or collaboration. So then we could, the Latino voter there that's been left out of California, basically just completely abused of the process or ownership or how to make investments there. I mean, they're doing the shittiest jobs typically across the state and getting the least benefits of the state. We could go because we know people will go for that. People will show up for free workshops or free education on financial literacy. And then at that point, we would sign them up for the recall and to register to vote.
I think that is a wonderful idea. I mean, you're giving people a service, right? You're offering them the ability to have independence, and then while they're there, you're getting the data collection, you're getting them registered, you're getting a signature. I mean, it's a 5-for-1 combo. I do that very similarly, that I travel across the country and I'll do voter registration trainings or political activism trainings. And so I'm providing a service, a tool for free, and also getting everybody registered as I go. No, I think it's a wonderful idea. And I'll probably even attend one of those, Grant, with your permission. I mean, I need some financial literacy myself.
Everybody needs it, bro. Like, this is what somebody was saying earlier. Like, if you don't get your money right, you can't have freedom in this country. I mean, for real. Like, the idea that anybody can save money in this country is completely ridiculous. Every bank should have to put a damn disclaimer that saving money is actually an impossibility that we cannot deliver on. The 401ks, the IRAs, the Roths, the buying a house, 30-year mortgage with 3% down, all of it has trapped the American middle class.
I love it, guys. Just an awesome conversation. Fantastic.
And the
Um,
other advantage, I'm sorry to interrupt, but these career politicians cannot do anything, not even come close to doing the things that we're talking about offering here. Republican or Democrat, by the way. They cannot, they only know how to go to their little fundraisers, have their $2,000 dinners, make promises they can't keep, but they're not truly offering services and education and awareness to the citizens.
Hey Grant, yeah, I'm in LA. I think Rob, you said you're in LA. A lot of us in LA. But yeah, if you ever do stuff around here, totally would love to help out and educate folks. I think, like Scott said, I think it might be the best way because it's not coming from a political angle, but yet once they get there, hopefully they understand how they're intertwined.
Thanks, Jesse.
yeah, I just brought Civic Crisis up. Civic, what do you got? Civic, hit that mute button. You're muted. Okay. Well, look, I really appreciate you guys coming up. Scott, it was awesome to have you up in the space. Grant, as always, thank you so much for participating. Puncher, Robert, Infra, Jesse, um, really appreciate all you guys. And I guess we'll be wrapping it up for today. Everybody have themselves a wonderful day. Get out there and make a difference, man. I'll tell you one thing, Scott, Grant, you guys really inspired me today. We're making changes, and Scott, you're an awesome demonstration of like how you can make things work incrementally, right? One little step at a time. And I feel like I've been following your story for a long time. Scott, am I correct in saying that at one point you were debanked?
No, fortunately, I've never been debanked. Well, and Grant would probably peacefully hurt me for this. I'm actually really a terrible businessman, and that I was not even asking money from folks. I was sleeping on couches and, traveling across the country, basically breaking even, for the better part of the last decade. So I definitely would benefit from his courses.
Yeah, what an absolute inspiration, Scott. You've done so much with so little, and you've done it one step at a time. And today you're a national figure. And I speak for myself, but I think I speak for the room in saying kudos, respect, much love, man. We appreciate everything you're doing. And don't ever stop, man. Don't ever stop. Never back down. Never give up.
Thank you.
Hey, Dark. I know you're ready to wrap up, but I just wanted to say that Scott, you're a national treasure, and we're all so grateful. And just to this point about, and you've acknowledged it, that you need help on your personal wealth building. And Puncher spoke to your physical safety, and I echo that. You got to take care of yourself, but regarding your financial well-being and your ability to prosper, the team that you're on, JD Vance, Cash Patel, certainly Howard Howard Lutnick. I'm laughing because he owns hundreds of millions of dollars of Bitcoin. This is a Bitcoin team, and Infra speaks continuously and very eloquently to wealth inequality, and there's this there's a lot of moving parts here, but there's this union between the working class travail in America, an overpriced U.S. dollar, the need for a neutral reserve currency, and Bitcoin's role in that. And I would just urge you to put in the work and focus on Bitcoin, because it can unite so many of your larger political goals for your country and your personal well-being. So that would be my wish for you, is that you would read a few of the books and go down the rabbit hole.
Yeah, hey Scott, I would start with
Appreciate
maybe
that.
down. I don't know if you enjoy audiobooks or prefer to read, but a book called The Bitcoin Standard by Saifedean Ammous. Absolutely mind blowing. It'll change the way you think about money and think about the world, and economics. So I think that's an awesome place to start. But we look forward to having you. Look, I'm glad you gave us a follow. We're going to make sure we invite you when we have these spaces, and we can get your message out to tens of thousands of Bitcoiners. And I'm really excited for you and for all you guys are doing for us as Bitcoiners and us as people and citizens. You're a hero. All right, with that, we're going to wrap it up. Thank you, everybody, for coming out. It's been an awesome
Great
bit.
room today, Dark Side.
Thank you so much, Grant. What an awesome
It
space.
was nice not to have to hear you and Joe argue.
Yeah, yeah, wasn't that nice? That's okay. We're not going to say his name again, or he's going to show up. Anyway,
How
let's
does he
wrap it
do that?
up.
How does he do that where he shows up when his name's mentioned?
I think it's an AI agent, actually. Um, I
Nah,
think
somebody
he's.
in here calls him and says they're talking about you again, Joe.
Yeah, but we're always talking about Joe. So I don't know, man. It's impossible to avoid Joe, but no, we love Joe. He's an awesome member of the community, one of our brightest Bitcoiners, and yeah, you know, we're blessed to have him. Look, everybody, have an awesome day. Thank you so much for showing up. Thanks to Lyn Alden, Scott, Grant, everybody. Thank you so much. Have a wonderful day. Look forward to seeing everybody on Monday.
Hey, Thomas, you there? Can you guys hear me?